Welcome everybody to day 3 of the meeting. We've got, really the next discussion is on reporting sustainability program information, which I think is clearly strategically important for us. And then we've got discussions on the second stage conceptual framework project and concessionary leases as well. So quite a lot to get through today, but a lot of good discussions in prospect, I think. So without further ado, I think, Ross, you're going to start us off on item 7, reporting sustainability program information, but also supported by Agustina, who's done a lot of the spade work on the implementation examples. So over to you, Ross.
Yeah, thanks, Ian. And just to note, one of the screens up here isn't working at the moment. I don't know. It's kind of not showing anything. It's flashing. If you want to come AV, help us out. So we can see the slides, but we can't see the Zoom screen. But I'm going to start anyway. So yeah, thanks, Ian, for the introduction, and thanks, Augustina, for the support on developing the implementation illustrative examples. We just as some background. This is a limited scope project that the board decided to add when it made decisions related to the mid-period work program consultation. It's, I like to say, our first dip into sustainability reporting, and really looking at how we can enhance RPG1 and RPG3 and make sure people are aware that they are relevant guidance to think about in the sustainability reporting space, and that they become used more often and useful. So we thought it was important, and the board thought it was important, that we develop some guidance to make that more clear. And we spent some time looking at the models and their applicability and thinking about it. And another point I wanted to talk about that's in the papers and important is that timeliness on this project is important, that we do start to make some inroads on it. And that's why we've taken the approach we've taken. The board had a first high-level discussion on this in June. We had a first look at the detailed ED at the July check-in session, and agreed we'd bring it back today for approval. So you have the ED in markup from what you saw at the July check-in, with all the new material marked up and changes. And I've got a few issues we'll walk through today, and looking for feedback from the board members on those issues.
Thanks very much. And I think, just to emphasize clearly, you haven't seen the material in the implementation examples before, although you've seen IGs. And so we're aware of the fact that, it's the first time you've really had a look at this. I think it brings out a number of themes. And really, we want to hear where members are at with this now, from a point of view of timeliness and external perspective. Obviously, it'd be nice if we got to approval, but equally, if there are things that emerge in the discussions, then I think we need to see what those are. But we should not push ourselves unduly if we've really got significant problems coming out. So I think that's really where we're at on this. So we just need to actually get good debate and engagement from the members, and then we'll feel our way on that one.
So the first paper, 7.2.1, really was the actions taken to address the instructions that we received at the check-in session. And I'm just, when we go through this recommendation, and I propose we do that one by one. So all the changes are in markup in the ED. The first recommendation is on communication and why the IPSASB is proposing additional non-authoritative guidance to RPG 1 and 3. And that's in the specific BCs explaining it, and the changes have been made to the exposure draft itself.
Yeah, so we'll just take comments as we go through and check that members are happy with how staff have addressed the instructions from last time round. So any comments on the approach that's been taken? Yeah, Mike.
Thank you very much. Yeah, I'm totally satisfied with removing that green program. wording, but however, I think we should be consistent with using the term sustainability within our literature. And we had, I think, a very clear definition of sustainability in our consultation paper. And therefore, I think an additional sentences at the beginning of that paper where we explain that it's just limited to that environmental climate change related understanding of sustainability. Yeah, just to avoid that our stakeholders are asking for all the other, let's say, shades of sustainability. Thank you.
Thanks, Mike. You actually stepped ahead of the first point. I just wanted to walk point by point, but if nobody else has got any comments on the first point, then we'll pick this one up now. I mean, just in the CP, we didn't actually define sustainability. I think we picked up on the definition of sustainable development, but Ross.
Yeah, I take your point, and the illustrative examples we've developed are more climate related, but it doesn't preclude entities that are doing other activities related to the S and the G space and sustainability from reporting on those programs as well. So I'm not sure I'd want to elaborate on the definition more. I think the purpose of having the sustainability link is that people see RPG3 and reporting on service performance information as applicable in the sustainability space. So I don't think there is a need to define it.
Lindy, are you on that as well? Okay.
I wonder if we should just say, well, in the objective, we just say maybe something where we say reporting of sustainability program information. Maybe we can say something like climate related or environmental, just to, because I think that's the concern, is that we are only focusing on one element in here. So without defining, maybe just describe.
Thanks, Lindy. And Mike, you're okay with that suggestion? That sort of ties it down a bit without. Okay, thanks. I think collectively that's a good suggestion. Okay, no other points. So we move on to the third bullet now.
So just to explain the third bullet, in the first version of the ED, the request for comments where it talks about the reason why we're proposing changes and the actual objective in the ED were inconsistent. So the instruction from the board was to go back and make sure that we had consistency between those two paragraphs, and that change has been made. They're now consistent.
Members okay with that? Okay, I think we're good on that.
And the last recommendation was to develop the BCs that captured the board's thinking on why we're doing the project and the specific changes being proposed for RPG1 and RPG3. Those have now been developed and are now included in the exposure draft.
Okay. Members okay with that? Good. Okay. And obviously we'll walk through the documents anyhow. So any specific comments you can pick up. Okay. Thanks,
Yeah, I did want to, before we move on to the next topic, just thank the members who did send comments and editorials in advance. We have taken those and logged them. We will be processing all the edits along with all the final changes that have been provided when we finalize the document after this meeting. So the main development since the July check-in session was to actually go away and develop the illustrative examples. And you may recall in July that we actually agreed the four main topics that we would address or develop illustrative examples for, related to the implementation guidance that we proposed in July and was reviewed by the board and accepted. And in your agenda item 7.2.2, there's the overview of the development of those illustrative examples that Augustina has helped very much with. A couple points I wanted to highlight on those examples that we didn't get into in the paper, but I think is important context, is those examples have been developed from real programs. Not going to get specific on where the programs were from, but from the information shared with staff, we've been able to find real programs where these types of activities have been put in place and financed through these instruments. So we're very much trying to make this as practical as possible and illustrative, but it's also not exhaustive. So we're not trying to capture every type of green program that may exist. We tried to come up with the major types of financing instruments and programs to help illustrate how RPG 3 can be applied. But by no means should it be seen as exhaustive or that we are going to try and capture everything. I think it would be next to impossible to do that. So with that, and maybe we'll go through the examples one by one.
Yeah, I think that's helpful. And just to point out that they have indeed come from several different jurisdictions. What we were looking for was good examples that sourced, that gave the right sort of fact pattern that would fit with, that would be helpful to users. And having said that, there is some simplification that we've done to help bring out points.
Thanks. So if we start with the illustrative examples, example 1 is the green bond. And I did want to note, I have had a useful comment that I would like to reflect on the title. A member pointed out, and staff acknowledged this as well when we were doing these programs, that when we first started doing this work, we kind of thought, well, the green bond itself is what we're talking about. It's not. It's the proceeds from the green bond that have been implemented in activity. So we're going to look at the example title and add something like proceeds or use of proceeds from green bond in an activity. And thanks to the member for raising that point. I just wanted to acknowledge that up front because it's a subtle point, but it's important. And I think it's kind of at the heart of what we're trying to talk about today. So any feedback on example 1, the green bond?
And essentially we're in the actual draft document, aren't we, on page 11?
Yeah. Page 22 of your PDF pack, page 11 of the ED. So not seeing any comments. If that's the case, let's move on to example 2, the carbon tax. Same comment as before, we'll be revising the title slightly to reflect the proceeds from the carbon tax. And we'll work with that member on the specific wording.
Not helpful, sure if it's helpful to make the observation or not, but one of the things that came out in debate and discussion, which I personally hadn't focused on before, but I thought was quite useful, was actually reflecting on the fact that when you think about inputs, those are going to be in these examples, those inputs are going to be something that would impact on the financial statements for the reporting entity, and that the outputs may or may not appear in the financial statements, depending on whether actually an asset is created that is used by the entity to deliver the outcome or to contribute to delivery of the outcomes or not. And I thought this example for me was quite interesting because you had a couple of different things happening, and clearly the sort of outputs, if you like, were the charging units. So those would be PP&E, but equally then when you look at the outcomes, there are other things going on here. And I just personally found that quite interesting, actually. Renee.
Thank you. So it's more of a general comment. So when I came into this document, I'm not sure what I was expecting, but I had in the back of my mind the guidance from the RPG, what information to provide, how to display it, how to organize it. And then when I came in here and I looked at how you've structured the examples and the information you put in it, you've put snippets of what would eventually be the performance disclosure, the content of the report. So you've narrowed in on some of the key elements, the building blocks, but it's not necessarily presented as a true illustrative example of how you would communicate and write up. So I'm wondering if maybe at the beginning you articulate that what you've included here are kind of like the key elements, the building blocks. And as a user, I would take this and then it would help me understand how I build my blocks, but then this is not the reporting. This is not the end result. I would then create something that would go along the framework, right? So
So, and something, I was thinking that maybe you'd want to just bridge the two.
Thanks, Renee, because you've already got that sort of broader example of reporting in the RPG3, for example. And I agree with you. I think that would be quite helpful in terms of orienting that what we focused on here. And that would just give you that kind of, you know, we're not saying something different. We're just saying this is how it's thought through in these examples.
Yes, and another reflection I was having is to what extent the illustrative example is complete. So you could argue it's not complete because it's not necessarily addressing all of the guidance. So again, just recognizing that this is not meant to be a complete example. It's meant to just give guidance on key aspects.
Thanks, Renee. Ross?
Yeah,
you can
that's a
draft
good-
something appropriate. That
Yeah,
does
that makes sense to me. And Renee, if you're happy to work with us on kind of having a look at what the changes we make, I think that's a helpful clarification to add. So when people look at it, they don't think this is what the end all of what they have to do. It's more defining their performance indicators and how to, you know, calculate them. The presentation of them would be using the general model.
Okay, thanks for that. I'm not sure whether it's Todd next or I think it was Todd and then Claudia.
Thanks, Ian. And it's, I think, building a bit on Renee's comment and the comment that was made earlier about the change to the title of these examples. If it's going to be about the use of the proceeds of these things, and it was something I had mentioned to Ross over breakfast, we aren't demonstrating in all of these examples the full use of those proceeds. It's part of the proceeds, and it may be something that we can articulate if we address Renee's point and just be clear that, you know, we're acknowledging that the full proceeds more than what we're reporting on here.
Yeah, I mean, it may be something like, you know, these are projects financed through or something like that, because that's actually, you know, maybe that gives the right thing that it's not the whole proceeds, but it's a project that's been financed through that. Okay, Claudia.
I'm wondering if we need in the BCs at least an explanation why we selected 4 examples, even there are no new ideas explained by examples. In the standard, we normally use an example to explain a certain topic, and we don't repeat it by a second example. And when you go into detail of the example, it has all the same structure. It's just a different labeling where the income come and what it's the result is, but it's theoretically all the same. So we didn't explain that we have different structures. So maybe we should explain why we use a different approach than normally.
Ross.
Yeah, I think that's a good point to elaborate in the BCs, and happy to add that color on why we picked those specific examples and why we've given more than one. So we can do that, and we'll get you to have a look at that, Claudia, afterwards.
Yeah, it probably, in a way, it sort of links to Renee's point as well. I think it's some orientation for people. I think you're right, it's BCs, but I think there's some orientation as well that would help people in terms of the thought process that, you know, it isn't exhaustive, but what we've done is pick up on examples and, you know, that kind of thing. We can work out what goes in the sort of, if you like, the main text and what goes in BCs as well, but I think that would be helpful. Mari was next.
Yes, thank you. And I would like to say we have to pay attention to how to structure the financial reporting about the sustainability reporting. And so maybe the RPG 1 is closely related to RPG 3, and so how to structure and how to relate what we have to indicate the relation with the principle that was described, provided with the RPG 1. And so which principle is so closely related to the sustainability program. And it is an important perspective for us. Thank you.
Thanks, Murray. I think that whole connectivity piece is going to be very important if we start to move into sustainability reporting. But I think you're right to point that out. And again, I think it's part of the navigation and people seeing this, that this is not something separate, but it needs to sit with and work with the financial reporting. So I think we can make that point. Renee.
Thank you. So I have two more kind of general comments. So I'll start with the one that's building on Mary's comment. So thinking about other important building blocks in RPG3, one of them is linking when we're talking about financial information that can also be found in the financial statements, is making that link with the financial statements. So that's an aspect that I don't believe your illustrative examples are achieving. And through my conversation so far with controllers at various levels of government, they are struggling in trying to understand how this is going to work, how that link will be achieved going forward in practice. So it would be interesting here that we start trying to articulate how you would make that link in our examples, like the green bond, for example. All of them have a financial. So I don't know how you do this. So that was a reflection I had, and I don't know if this is going to be too much effort at this stage.
Ross.
Yeah, I think I take the point, and we've tried to draw that link a little bit in the BCs themselves, where we talk about the underlying financial transactions themselves should be captured in the IPSASB. But I actually think what we're going to talk about on Friday is where we're going to start to get to the real bringing it all together in an integrated manner, because I don't think RPG 3 or 1 at the moment provide that model on how to link to the statements clearly. And we're adding non-authoritative guidance to existing RPGs. I think we have to be careful we don't infer guidance that's not there, as I do think we'd have to give some clarity on what we mean by that. But I do think that communication point should be coming across clearly, that the transactions themselves need to be in the financial statements, and that information should be integrated with the RPGs. How, maybe we can't give, but we can make that statement, I think.
I mean, what I'm wondering, because in a sense, actually, the opening remarks I made actually were to that point. And I'm wondering whether actually the bridge could be use of IGs, actually, because actually it seems to me that this is a classic point that, it is, the point about the inputs here will need to be presented as part of the financial statements. And we've got guidance on that already in IPSAS or in transfer expenses will be. And similarly, if assets are created as a result of that, then we've got guidance on PP&E. But equally, then what the RPG does is actually to address the reporting of outputs and outcomes and efficiency and effectiveness. And so, that's really kind of where the what the examples are trying to pull out. So we kind of need the bit about the thinking which you were referring to up front, but then I think we probably need something either in one of the existing existing IGs, or maybe a separate IG that just actually builds that link to give people that guidance. I don't think it would be that complex at the level we're doing, but I think it would be extremely important to address the kind of comments that you're getting from constituents. Ross.
Yeah, I do think we could maybe work that into both the IG1s in RPG 1 and 3, because we talk about applying the different models to reporting on the programs, but then we could also add the underlying financial transactions should be captured in your accrual financial information. I think that's a huge change, but I think that would help make that point a little more clear.
Yeah. Abdullah, you're going to take the practical perspective on this.
I thought there was mention in the financial implication should be recorded in your financials in the document somewhere.
Yeah, I think what Russ, so you're right, it is in picked up.
Yeah, so that is mentioned in the BCs. So I think Ian's suggestion is that we build on the IGs themselves so that people see it in that non-authoritative guidance.
Yeah, I mean, I think it's a challenge, isn't it? Because it is part of our thinking as a board, but then actually most likely users are actually going to go and have a look at IGs and IEs. So actually we need probably in both places, actually. Okay. Renee.
And my second comment, so it's again a very high level reflection. I don't necessarily think it will transpire in a change here, but again, as I was thinking about this particular project, I was thinking of kind of like two paths where going in parallel. We're on this short-term path. We want to do something very quick with the RPGs, but eventually we may get on this other much more longer term path. And to what extent what we're doing here is eventually going to be superseded. That's going to be superseded by something else we will do when we align with the IPSASB standards, for example. So is there a risk? I don't know if it's a risk. I don't know if it's a consideration. I'm not sure what it is, but it's a reflection at this point. Like, what do we want to do with this? Is there a way to communicate our strategy? Not necessarily here, maybe elsewhere. I just wanted to share my reflection with the board.
Yeah, I think it's a good point, Renee, and we've been thinking about that as well. As you know, we've decided we're doing this limited scope piece of work, but you know, as you start working on it, you start to see the bigger issues that are out there. So maybe we can find a way to acknowledge that a little bit better in a BC. I think we have to be really careful on how much we say here, though, because those big decisions really are still in the air. We've got, I think as of this morning, around 70 comment letters on sustainability, the CP we have to make our way through, and the board's got a lot of decisions to make. So we shouldn't over commit in any one way until we get through that process. Maybe when we're finalizing these changes after consultation, we'll have further clarity and we'll be able to give a little bit more of a way forward than here. But I think we can acknowledge that CP and that ongoing stream of work, and that this is part of a bigger conversation.
I mean, I think that's where we face the tension with what's in our actual guidance material and what's in our communication, because the guidance should last for a reasonable period of time. So we'll need to find the balance on that. And I think you're right, Ross, the communication we put out with an exposure draft, likely the position will be clearer by the time we get to the final. So we'll have to, you know, keep that in mind in terms of what we say here and what we say then around it. And in our general communications around where we're going on sustainability reporting. Good, okay. So, I mean, it's so far we've picked up sort of generic comments in terms of how we position this and so on, not specifics. But I think it's worthwhile just walking through the other two implementation examples to see if there are any particular comments board members want to pick up there.
So the next example 3, investments in infrastructure to mitigate the impacts of climate change.
Yeah, Camira.
Thanks, Chair. I have a minor comment when we are providing the performance indicators in input and also output. I thought, so the information is kind of missing. So for the input, we are mentioned that it's the funding collected from environmental penalties, but actually it's the funds made available for the for this activity. And in output, the number of rain gardens is missing from the description of the example. So I thought that maybe it would be useful to present information in a tabular format with numbers. So not only the description that you are providing, but also the numbers, because you know the accountants are more numeric. So it will help them better to understand how to derive or how to find out what are the inputs, outputs, and so on and so forth. Thanks.
I mean, I think at the moment, the question, Camira, is does that really add a lot on in terms of, you know, because obviously board members haven't seen that. Actually, that might be, you know, perhaps a more amenable presentation, but does it actually change the substance of the example? And I think that's what we've, you know, we need to think very carefully at the moment about that. Ross.
Yeah, I take the point. I'm not sure tabular will help that much in my view. It might add more information and be confusing. And I think if we do it in one, we'd want to do it in all of them. So for consistency, and it might work better for this particular example, but for others, I'm not sure it helps. Maybe Augustina did the main development, so I'll see if she's got some thoughts.
No, I think the thought was just to be consistent across from a presentation perspective, and just to ensure that if you did a particular way on one, you wouldn't change on the other one, because similar to, I think, what Claudia was saying, that the theoretical part is similar across, you're just providing different examples from that perspective.
Camira.
Yes, just a quick reply. I think it will be good then to include, at least if we are not changing the presentation in tabular format, but just to include the numbers, just that would be helpful. Thanks.
I agree with that.
Okay. I mean, I think though we have to be very careful, because actually what staff did was to dial back on the detailed information precisely. So these are simplified examples, and I think we can make that point perhaps a little more clearly, because people ask for numbers so they can see the outworking, but then you have to be really careful not to give too many numbers. So I think there's quite a careful balance here in terms of what we do. So I think we can have a look at that. I think the question is, how much can we do at this point in time without, essentially holding the whole thing up? Ross?
Yeah, I think we'll check the numbers and make sure there's consistency and pattern across, and that we're providing the same numbers and information. We haven't simplified too much. And we'll check with you, Camira, on this specific example.
Okay. Lindy.
Thank you very much. And I guess we're probably going to have to disclaim a lot more in this area than what we would normally do, because I think also saying that it's very simplified. We've taken example. We also don't think that this is possibly the only way you could address this issue. We don't think that, you don't want people to get the impression that these outcomes are ideal or not, or correct or not, because, people use these as a baseline. Well, if you achieve 20%, then it's okay or not. So I do think we probably have to think about how we explain what we've done and what it doesn't, and what it's just an illustration. It doesn't mean that this is how you would deal with these type of arrangements. It doesn't mean that what is reported as your outcomes or outputs are actually correct or ideal or something like that.
Yeah, I mean, it's sort of language around can be reported rather than should be. Yeah. Okay. Okay, let's just have a look at the final item. Adrian.
I think to the last comment, I was thinking that it's a bit frustrating to have those additional guidance to RPG3, especially where we know that in many jurisdictions, incentive programs are in fact not really incentive. They are decided on political or social basis because there is this political claim for action. And when it is said that these guidance apply to entities that establish service performance objectives, there are many entities that have so-called incentive programs with no objectives at all, no clear objectives at all. So where could we state that there is a need for establishing performance objectives so that this makes sense? All this makes sense. Otherwise, we would have a lot of entities or public entities who would never report on anything, even sustainability, because they are not able to set performance objectives. I've seen that as a public auditor in my country. I've seen many so-called green programs, but nobody knows what the objectives are. We know the money that is spent, but we don't know exactly what for. It's a sort of a generic objective, help something or incentivize something, but there is no performance indicators. And then the reporting is useless.
I think it's a really good point, actually. And that's like why we're doing this project, is we have this guidance where people can objectively report on indicators of programs, and we want them to use it for sustainability. Maybe we've just been too soft in why we're doing this project, is we want this guidance to be used to make sure that these programs, from a PFM perspective, have objectives and metrics, and that they're managed in a way to make sure that the impact of the program is captured, positive or negative. I'm not sure how far we can go.
Well, I think that's the challenge we face. I mean, it's like the discussion that we've had on transfer expenses, because ultimately, if bodies making transfers don't actually attach any performance, any compliance obligations against the transfers that they make, then that's their issue, if you like. And I think that's where what we're trying to do is report on what's happened. If there is nothing to report, then in many respects that's not for us. So I think we have to, we're reporting on what's happened as a result. If they haven't set anything, there's nothing to report. But that's not our problem. That's actually the problem. That's a PFM problem rather than the reporting problem. Ross.
So I'm just wondering if maybe I'm looking at the RPGs, BC 47 and 48, where we talk about that. We say the impacts. Maybe we just add a little bit edit on there from a PFM perspective. That we could look in the edits there to maybe capture that.
I mean, I think it's really important that we sit it right, because I think when you get into the broader debate, people are sort of kind of focusing on the reporting, whereas actually, if you follow the sort of Task Force for Climate Related Financial Disclosures approach, actually what is being said is, in order to actually for these programs, you need the right governance, you need strategy, you need risk management, and you need metrics, and the reporting comes at the end of that. So actually, the function of the reporting is to report what's there, rather than to actually say you must have this. It's actually it's where you start from, and we don't control the front end of the process. So I think that's where you can make the point that if there are no metrics, then you can't report on them, but that's probably about as far as we can go in positioning. Adrian, you want to come back on that?
Well, yes, I want to come back. So I don't feel comfortable with the idea that it's their problem. I thought that this board was feeding a efficient public financial management, and we do, and we recommend practices, and we recommend some ways of reporting on important issues that inform the users of the financial statements and the documents attached on specific and somewhat strategic issues that are useful for their decision making. Now, if we say, okay, they report on what they can report. If they don't want to report, if they have nothing to report on, then okay, it's fine, it's their problem. I'm really not comfortable with that. And as far as we recommend practices, we could also recommend that these practices are consistent. And if we recommend reporting on service performance, we could also recommend at the same time, non-authoritatively, an effort to set objectives, metrics, etc. It's just a recommendation. It's not mandatory for preparers. Or
I mean, it does come back to what's our remit as a board, unfortunately. There's a number of areas where we might want to say something more publicly. We might want to say something more publicly on budgeting, but that's outside our remit. And I think we've just got to be really, really careful how we couch this. So, I mean, we can have a look, but I think you come back to what's our remit, and our remit is is reporting, rather than okay, that contributes to strong public financial management, but actually, whilst we can recommend reporting being part of that, we can't recommend you need to do it in this way or whatever. So there are constraints, and I think we have to be really careful, particularly in the environment we're in at the moment, not to overpromise, and also not to to sort of set ourselves up as a campaigning body. So we've got a really fine line that we have to tread there. So I mean, we can have a look to see if there's anything that we can strengthen, but I think we have to really stick within our remit on this one. Okay, I'm not sure whether it's Renee or Lindy was next. Oh, okay, was Chris first then? Okay.
Thank you, Jan. I just want to collaborate what Adrian said, which was this has been an issue. I have a practical experience when we were trying to train preparers on financial reporting, and we referred to the RPG3, and a lot of them were confused. Actually, how do I identify an objective for my organization that I can report on service performance? It was an important issue for discussion, which we made everybody to go back home and begin to think about. And on a general note, for me, I'm very, very happy that the board is taking up RPGs, elaborating on it, because we've been criticized over the years that the board, the public sector, is too slow on taking up sustainability account reporting. And for me, I think it was just based on ignorance of what the RPGs were meant to achieve. So I'm excited that we are bringing this up to further communicate the relevance of RPGs on sustainability. So I think I support the board, and I urge us to work hard and really be able to crystallize the various areas that we need to communicate to the public to buy into our standard.
Thanks, Chris. I think you're right. It's a very good opportunity to raise the profile of RPGs. So I think, was it Renee and then Lindy?
Yes, thank you. So building on Adrian's point, it kind of connects to another thought I was having when I was reading. For example, if I take the green bond details and objectives, and the way the approach that's taken right now, it's just go straight into the actual objectives. And I'm thinking if maybe we could frame, for example, the objective section by referring to the guidance that we have in RPG. And RPG paragraph 38 is clear. The following information should be displayed. Service performance objectives is A, 38A. So maybe you preface that objective content, because here what you've drafted is proposed content, but before you get in the proposed content, what if we preface it by a statement that we make referring to the guidance in 38A and saying you should have. So this way we're communicating as a board that you should have an objective. The RPG is actually asking you to have an objective. And now here's how you would present your objective. So maybe have a bit of guidance before we get straight into the illustrative example. And maybe we could use that approach throughout, right? With other elements.
Thanks, Renee. I mean, I think that's helpful to make that linkage and to that up in that way. And perhaps if you can work with staff just to work out whether we implement that through one lot of wording or whether that comes into a piece of rubric at the start of each one without becoming too repetitive. Lindy.
Thank you very much. I mean, I was just going to say, and maybe what Renee is suggesting should go into, you know, the IGs where we explain why you use this IG1 or IG2 and maybe make a more stronger language in there, because we do talk about you using this. You can use RPG3 to report against your set matrices, etc. Maybe we should just say it's your predetermined ones which you are held publicly accountable, and this is how you would apply it. So maybe just use better, you know, maybe stronger language in here, and then don't need to deal with it in the examples. Thanks.
Thanks, Cindy. Now, I think there's a piece of work, if you and Renee don't mind doing it offline with staff, just to actually kind of shape up that wording. That sounds like quite a good way forward, and it would at least go some way towards the more proactive approach, if I call it that I think Adrienne was looking for. Okay. Any other comments? Oh, Nima.
Thank you, Ian. I've been looking at the examples in relation to what we are doing back home. We had, the board had issued what they call Tanzania Financial Reporting Standard #1 on reporting by those charged with governance, has some sort of a similar information. So on the input side, I don't know if it will make more sense if we add it, instead of talking only of the cost, the funds collected, but rather as it was in the RPG, talk of the input in terms of the resources, whether it's human, intellectual capital. Otherwise, people might look at the example and think of inputs only as the financial inputs, whereas there are, or there can be other inputs.
Thanks, Nima. That's a good point. We actually had more complex examples in a couple of cases where we did talk about human inputs as well. We simplified it because we just wanted to make the points more sharp, but we could, for one of the examples, add back in the human resources just to make it clear that it's not only talking about the reporting of the use of funds, that it's all resources.
Yeah, we need to be careful, I think, you know, because you could talk about direct inputs, and some of this is about what's directly rather than the organizational resources and so on. So,
well, for example, the one we had on tree planting, we talked about that they had staff that were providing tree planting services and a number of full-time equivalent hours they were going to invest in the program and the output of that. So, I mean, that's part of the program. If you wanted to add that in, we could, or we can leave it simplified.
I think if this, at this stage, going back to what are we trying to do, let's try and think about the messaging. And so I think there's the point that Nima's made about a more integrated approach in terms of the organization. But I think let's try and communicate that, and then, you know, we might look more at language of direct inputs or something like that, because actually I think there's quite a lot of indirect support that would come from an organization, and, you know, I think you can always elaborate, but we lose the clarity of the message if we do that. Okay. Where do you want to go to next?
Sorry. So that takes us through the examples, and then we come to approval. So before we get to approval, what I was thinking is if the board's comfortable that we work with an editorial group to process the issues around communication that we've talked to today, I think there's 5 or 6 members that are quite engaged, then we could vote to approve and then have an editorial process to kind of finalize the guidance, the non-authoritative guidance and the BCs and the final communication.
I think the question is the board comfortable to proceed on that basis, or does it want to see the drafting before it approves? Because there's quite a lot of context there. So, I mean, I think you're right. I think we do need, you know, a group that, you know, just to get that drafting right, which is perhaps a prior stage before actually the final editorial process. I'm not hearing anybody arguing for any sort of significant changes in content, but actually quite a lot is positioning. And the question is actually, does the board want to see some of that positioning drafting? I think that's the question. Lynn.
So from a personal perspective, I'm happy not to see that. I think it's, dare I say, in the public interest that we get something out. And I think that continued drafting coming back to a later board, I don't see the benefit of that. I see sort of the reputational cost of that in terms of timeliness. So I think we've got a group of very engaged people from the discussion today. I would spare his blushes and ask for my technical advisor also to be involved. He's got some expertise in this space, and I think that would be useful. But I'm happy to leave it to that group to do it on our behalf. And I think it's in the public interest that we get something out. So I'm happy with that.
Thanks, Lynn. Scott.
Yeah, I just want to support Lynn on that. I think timely, in this case, timely is more important. It's unauthoritative, and I think we need to get it out. So I would encourage us to not strive for the perfection here, but move forward. I think, by the way, I was make a comment. I think the examples were well done. I think if you're out there and you don't have the slightest idea what to do, I think this really helped with that. So hats off to the staff for that.
Thanks, Scott. I think it's always good to have that feedback from members. Okay, so does anybody disagree with the moving to approval now, subject to the work of that group? Okay, so I think, Ross, we're into the approval process.
Thanks. So there'll be two parts to this. I'm going to ask for the vote. We'll take the vote, and then after we'll discuss the period for exposure, which is also discussed in the paper. So with that, I'm going to start with vote for, and I'm going to look around the room, count the votes. I'm going to check online for Ajith, and then we'll do against, and we'll finalize the vote. And I note that Patricia's out of the room. I think she's doing her photo, so I'll make sure to ask her vote when she comes back. But I have had discussions with Patricia on her comments. I think she's supportive, but I'll confirm that as well. So with that, I'd like to vote or ask those voting for to please raise your hand and leave them up. So I've got 17, and Patricia, we're just having a vote. I've got 18, so I've got 18 for. I'm assuming none against, as that's the 18 board members. So with that, we approve ED 83. And then again, the rationales in the paper, we talked about this a little bit in July about our different exposure periods. I'll just remind the board, our normal exposure period when we're doing authoritative guidance is 4 months, except for improvements. And because of the consequential nature, it's actually footnoted in due process that the normal exposure period for improvements because of their consequential nature is 60 days. The staff view in the paper is because we're making only changes to non-authoritative guidance, that these would be consequential amendments and that 60 days would be appropriate. It also helps with the timeliness of the issue. Still allows for comments. We'll deal with the comments in the same way. We don't treat them any differently. It's just the amount of time we give for people to develop their responses and submit them. So with that, the board or the staff and board sponsor recommendation is a 60-day exposure period from the date of publication.
So can I check on disagreement with that proposal? Renee, you're not disagreeing. Okay, anybody disagree with the staff recommendation? Okay, sorry, you want to come in, Renee? Yeah.
Sorry, I'm probably out of line with the protocol, but there was a comment I wanted to make. Paragraph 4 of RPG 1. I'm just asking the staff to consider whether we should consider amending it as a consequential amendment, because it says right now that this RPG does not directly address issues associated with reporting on environmental sustainability. So now that we are including some examples on it, I'm wondering if 4 still makes sense as currently written. So I'm just a little placeholder there for the drafting group.
So if we can just run, so in terms of we'll come back in a minute to that, Renee. So given that we've approved it, we've approved the consultation period. Is there anything else we need to do on the technical aspects of that before we go back to Renee's point? I mean, you raise a good point there, and the reason, and this was something that Ross and I had a debate on, because he quite rightly raised that. And if you like, just the history on this is that when we developed RPG 1 originally, obviously it's reporting on the long-term financial sustainability of an entity's or long-term sustainability of an entity's finance. Forget the exact title, but basically we did that back in 2010, 2011, and we were under considerable pressure from a particular organisation to basically broaden it beyond financial sustainability to environmental sustainability. And so what we were trying to do there was to say that the RPG is about the financial impacts of all the various different activities, inflows, outflows, investing, and so on, and the sustainability in financial terms. So then what the debate was well, with these programs, actually there's a lot of non-financial information, but ultimately we'll all come back to what is the impact on the operations of that entity, and that will be part of their financial reporting in terms of transactions already entered into, or it will be part of the future financial reporting, the future cash flows in terms of financial sustainability. So that was why we were trying to sort of position it in that way. And when Ross and I discussed this, it's possible to read it probably either way. And that's really, I think, where, what you're saying is you read it one way, which is the way that Ross read it. I looked at it and I said, oh, well, I could read it another way. So that's why there is that lack of clarity. I mean, it's a bit of a long-winded explanation, but I thought it was useful for the board to just understand the context and the history behind why that paragraph is actually there. Now, as to whether we should actually think about some form of, change in wording to clarify that, I think that's a question probably separate, but should we actually think about changing it through annual improvements or something like that? So anyway, I'll stop rabbiting at that point in time and then pick up Ross and Lindy.
Yeah, so Renee, when I read that, I had the same reaction as you initially, but in discussing with Ian, I think you have to read both sentences together, because I think we are really getting to the second part of that sentence, the financial impact of the programs on your long-term finances. It's not environmental sustainability per se. So I think we should leave it in, but I would say let's watch for comments on this and see what we hear back, because this is an ED. We might hear an artful way forward or another way to deal with this, and then we can pick up final changes coming out of that. But I'm not sure we should make it that environmental sustainability is going to arise from this alone. I think that's the point that convinced me.
Thanks. And I think to your point again earlier, Renee, we're going to have to think about this as our overall approach and the extent of our work develops. So, Lindy.
Thank you very much. I've attended a couple of kind of update sessions by the IPSASB. They've actually got in their slides, and I'll try and get it. I've been trying to get it for you. They've got quite a nice picture where they explain how everything works together. And I think that would be useful if we adopt it, because they also show how integrated reporting fits in all of this. And I think this paragraph 4 is actually, it's probably broader than anything that we put in the annual report or the AFS. It's a lot broader, and they have a very good, useful illustration on that. And I think if we put the IPSASs and the RPGs together in that and have our own way of putting that, it would be useful to add to this document. Yeah.
Thanks, Lindy. That's very helpful. And as you say, if you can get hold of that, circulate that, that would be really helpful, I think, in terms of informing the board and its both its strategic discussions and then what and how we communicate. Oh, Mari, got your flag up.
Yes, thank you. How to integrate the RPG1 and RPG3 is so important for me. So which it is important to definitely I indicate the applicable principles. And so at present, IG2 and IG3 is not definitely indicate the related principles. And so in order to integrate the financial sustainability and environmental sustainability, it is so important to closely relate which principle is closely related to the sustainable program. Thank you.
Thanks, Murray. So I think there's just a question as to, is there any further clarification? And certainly, Murray, if you or Takeo has any specific views on additional pieces of wording, please let staff know on that. Thank you. Okay. So I thought that was a very helpful discussion, actually. I think that's helped orient us. And I think, to the points made from board members, thank you very much for agreeing that we should move this forward quickly. I think that's very important for us strategically. So, and again, thank you to staff for the, work that's gone into this. I know there was a lot of debate and discussion, and I think that's been really helpful in support of this debate. So with that, we close that item and we move into item 8, which is the initial update on the responses from part 2 of the conceptual framework project. And there was that amended analysis, Ross, that you circulated yesterday. So just wait for a minute to get John to come to the table.
And maybe just on that, apologies from staff on the clerical error that when our report was drafted, we incorrectly missed a jurisdiction or a region. So we circulated that and updated and sent that yesterday so that everybody has the full overview of analysis. And just to assure everyone, we had those responses, we had looked at them. It was literally pulling together the comment analysis that it just in our spreadsheet missed a column.
Okay, so welcome, John, back to the table.
Yeah, good morning, everybody. And thanks to Ross for circulating that note last night, which was entirely down to me and my failure to identify that I'd missed out from the graph Africa. So apologies to everybody, particularly those from Africa, because there was actually a very good response from African constituents. this is really an information item, so it's not meant to provoke debate, but it is meant to give you an indication of the areas where we think board resources are likely to be directed. And since the paper was drafted, Ross, the chair, and I have reconsidered the prioritization, and I'll come on to that a little bit later. The standing items aren't particularly informative apart from the project roadmap, because in accordance with the approach, all the instructions and decisions which were provided by you up until February this year have been incorporated in ED 81. Okay, and ED 81 proposed limited scope modifications to 2 chapters of the framework. Chapter 3 dealing with qualitative characteristics and constraints, and chapter 5 dealing with the elements. And the focus on chapter 3 was on the introduction of neutrality to the core of the text, but at the same time not including neutrality as an QC in its own right. And secondly, looking at the way in which materiality is affected by voluminous disclosures. Okay, so the first on neutrality and prudence, and the second on the obscuring of information, adding another factor to that discussion of materiality. On chapter 3, the changes were mostly to do with the definitions and structuring of the guidance on liabilities and to a lesser extent assets, and also introducing guidance on units of account into the framework, on which the framework at the moment is silent, and also introducing executory contract principles into the framework in that unit of account section. However, we didn't adopt the term unit of account. We talked about binding arrangements that are equally unperformed by both parties. Okay. That's the corrected regional graph, which was circulated yesterday afternoon. Staff have done a very high level preliminary view of the 27 responses that have been received. Generally speaking, the responses have been supportive. Now, for each of these, this 8 SMCs on which the IPSASB particularly sought views, there have been at least one in each case, some cases more than one, which have not been supportive. But overall, there was quite a high level of support for what was proposed. And I think that's reflected by, probably reflects the fact that in terms of accounting outcomes, very few of the changes which have been proposed are going to affect the accounting outcomes. So a lot of this is cleaning up the framework, making the flow of the framework reflect the sequencing of components of definitions. Issues where there was disagreement or where fresh insights were provided. Firstly, prudence. As might be expected, a minority of respondents, mostly from Europe, advocated the inclusion of prudence as a qualitative characteristic in its own right, and cited public sector reasons such as intergenerational equity. Now, there's nothing particularly new in that, but some of the reasons which were put forward, I don't think we've previously considered. Symmetry, there wasn't too much of a pushback on the way the framework advocates the adoption of symmetrical requirements. In other words, that there should not be different requirements for the recognition of asset, liability, revenue, and expense. However, some respondents actually commented on what they saw as a dislocation between the framework's strong advocacy of symmetry and the number of asymmetrical requirements in the existing literature. There were also a minority of respondents who said that the terms symmetry and asymmetry weren't very well explained, that we're using these terms quite frequently, but some of our constituents, don't really fully understand what we mean. So I think both staff and the board need to look at that. The rights approach to a resource in the context of an asset, we adopted a much more overtly rights-based approach in ED 81. To some extent, I think that reflected the latest thinking of the ISB. Well, there were a minority of respondents who disagreed with that. They argued that it's important that an underlying asset is presented in the financial statements, and don't like what they feel is any undermining of that in their view, accountability principle. Now, I think some of these comments really reiterated reservations which had been expressed to consultation documents in the leasing project. And lastly, the location of guidance on binding arrangements equally unperformed by both parties. Now, you may remember that when we approved ED 81, there was a view by certain members of the board that guidance on binding arrangements equally unperformed by both parties should be in a separate subsection rather than in the section on unit of account. Now, generally speaking, there was strong support for us introducing guidance on unit of account. And I think that's been reinforced by some of the discussions we've had at this meeting in the context of measurement. Similarly, there wasn't much of a pushback on the need for guidance on these types of binding arrangement. However, there was quite a lot of discussion by respondents of the location. So that's a matter of geography. I don't think it should detain us too long, but I do think we need to look again at the placement of this guidance. Moving on, there were 8 specific matters for comment. They're given in paragraph 8, starting with prudence and ending with the binding arrangements issue I've just discussed. Now, in paragraph 9, staff indicated that they proposed we look at the specific matters for comment on prudence and symmetry, units of account and binding arrangements equally unperformed by both parties as the first step. Since then, we further discussed this with Ross, Ian, Dave, and we think, in fact, it's better to do a 180-degree turn on that and to look at the specific matters for comment dealing with the elements. Okay, so that's specific matters for comment 3 to 6. Why is that? Well, because of the potential linkages with revenue and non-exchange expense project in particular, that it's important that that project reflects our most up-to-date thinking on the elements. And whilst the modifications of the definitions of an asset and a liability are not great, we do feel that it's important that any issues which emerge from discussion of those changes is done in December so that it can inform the revenue and non-exchange expense projects. Dependent on board time, it may be possible to look at all 8 specific matters for comment in December. However, as the chair has already said during this meeting, and Ross has said in his update on the work plan, the December meeting is quite a busy meeting, so we're unclear at the moment exactly how much time is going to be afforded to this stage of the framework. And also to note that although we'll be doing work on the measurement chapter of the framework, which we talked about on Monday, we'll be doing further work and bringing that to the board in October. It is likely that we will have to look at that chapter again at the December meeting. So there may not be time to go through all the specific matters for comment in December, but the ones we will be prioritizing are specific matters for comment 3 to 6, rather than those indicated in paragraph 9. Okay. As I say, the aim of this is really to give you information rather than to start deep discussion of these issues now. But we did think it worthwhile to sort of get the ball rolling on this topic at this meeting. Thank you, Chair.
Thanks, John. It's helpful to have that context. Any immediate observations from board members or questions about the proposed approach to consideration of responses? Okay, so thanks, John, for that. And as you say, we'll see at least the paper on SMCs 3 to 6 back in December. Good. Okay. Now we're running ahead of timetable at the moment. I think probably what I'd suggest is we have a coffee break before we start on the lease type arrangements. I see Lynn nodding as chair of the task force. So I think
the only thing I'm not sure, I just have to make sure the coffee's actually available. So you might have a couple minutes to wait until it's out. I don't see Lee at the back, but we can
okay, pop
out, but we can take the break.
Right. Well, let's sort of work on the assumption that it is available. So it's now 10:15, so or just after that. So if we say back here at 22, okay, and then we'll move into other lease type arrangements. Thanks, everyone. Okay, welcome back, everyone. I think the staff here coped well with the hiatus of us finishing outside their normal boundaries of early. So with apologies to the staff, I think they coped very well. And certainly everybody seems to be caffeinated now, which is good. With that, we move into the next session on other lease type arrangements, a lot of work put in by the task force since we had our last session in June, and some really interesting papers we've got to talk about today. As normal, if I can pass to Lynn as task force chair just to make any opening remarks, and then to pass to Joao in terms of taking us through the materials. So Lynn, to you.
Thanks, Ian. And firstly, thanks to the task force members for all the work over the last quarter. We've really taken the project forward, in my view, and that's absolute credit to the members of the task force who've worked really hard on it, and to Joao, who's supported us and worked us through some really tricky issues. There were times when I think we certainly needed some cold towels around our head, particularly on sale and leaseback, and that's been really helpful. Just to set a bit of the scene, I guess, and a few observations from me as the task force chair. I think we had some sort of principal decisions that we needed to make in bringing the papers forward for you today. Some of that is around how high should we set the bar for inclusion in IPSAS 43 of other lease type arrangements. And we did have long and fruitful discussions around that. And really, and you'll see it in the papers and we'll debate it today, part of that is around, having the right of use of something doesn't mean that you've got a right of use asset under the leasing standard. And so we sort of really debated that and thought about that hard, about what was the leasing standard written for, what types of transactions, what's the definition, and what should be encompassed in that. That said, we clearly had a whole raft of really useful feedback in the request for information. And so we were really and are acutely conscious of the need to manage expectations. And you'll see in the papers, some thought that we really do need to give and will give to feedback statement and also staff Q&A that do address the issues and arrangements that people have drawn to our attention. But we've been really clear, and we think we really need to be clear about what the leasing standard is for and what transactions should be encompassed in that. And we've set the bar relatively high on that. A couple of other observations. There is a paper in the pack on the linkages with the measurement project. In essence, however, what you'll notice is that we haven't commented on current value and whether or not a right of use asset should be held at current operational value. We couldn't do that because we haven't yet landed current operational value. So Ian, at your suggestion, I think we probably won't take that paper today, but happy to get feedback offline, but we will need to return to that point. And then finally, sale and leaseback, we did identify some what we consider to be public I've been busy during the course of this week. We've already had one task force meeting looking at illustrative examples, so we don't take our foot off the gas. And we're planning to looking at agendas going forward. We're in a good position on the illustrative examples, and we will be in a good position in terms of drafting. Clearly, it will depend on board time, but I think we would be ready for December if there was board time to allow for that. Thanks.
Thanks, Lynn. Very helpful, and thanks once again. And I'm glad that Joao's got the members of the task force on the slide. Thanks very much for the time on this. It is a tricky area, and fitting it in with our existing guidance and all of that kind of thing is challenging. So with that, I think, Joao, we head over to you in terms of taking us into the papers.
Thanks, Ian, and good morning, board members, technical advisors, and observers, and the gallery. Before diving into the papers itself, I'd like to say a few introductory remarks. First of all, for me personally, it's great to be at the table after almost 3 years without being physically double. I mean, in my home country, so I couldn't. I think you make my life easier coming to the board, and decision instructions, those standing items that of all.
So if they're still white, that means there's still either we've got a paper on that or there's still to be addressed. That's been addressed and they will drop off after the next meeting.
when the ISB and this board approved IFRS 16 and IPSASB 43, this is kind of a locked definition. It's tight. We can't go further than this. And so, because the whole standard was designed supported by this definition. I'm going to give you just a brief example, kind of heads up of what we'll discuss in the RFI. So we have the element of a period of time. So if an arrangement that conveys the right of the use of an asset in exchange of consideration, but does not specify the period of time, we cannot apply the standard because we need the period of time. It is one element for us to apply the full standard and to make calculations of this liability and so on. So the standard doesn't work. The preparer cannot apply the standard. So they need to go to other places, to other guidances to see, okay, how can I apply the principle in other places to this specific transaction. This is just an example where many times we have indefinitive terms. So it's not defined. I'm not saying that it is infinitive time. It is indefinite. We don't know how long it will take that arrangement. So it is just an example how these pieces need to work all together and exist together. And both IFRS 16 and IPSASB 43 have added extensive guidance to understand all these that we did not have in previous standards in IS 17 and in IPSASB 13. So I'd like to make a pause here before moving in, if the board wants to say anything.
So just to check everyone's clear, because I think it is, as you say, Joao, a very important foundation for everything that comes next. Okay, I think we're good.
Thanks, Ian, and thanks the board also. Sorry,
Liang, pardon me.
May I confirm my understanding that the scope will stick to the contract? Okay, that's good, because I think it will be good if we have a straightforward scope, which is only applicable to contract. Yeah, thank you.
I think you're slightly ahead of us, but that's useful in terms of moving us on, Joao.
Thanks for that comment. You are already anticipating some of the discussion. Now moving to the second layer of this complexity, if this was not already enough complexity. So now we are analyzing only one element, which is the contract. And now I'm going to dive in a little more, and I ask the board some patience to dive with me. So please, if you are good at doing apnea, so hold on. Which is, okay, a contract is an agreement between two or more parties that creates enforceable rights and obligations. So, and the board, when they approved the IPSASB 43, this discussion was already raised and also put for consultation ED 75, went a little bit further already than what ISB did, because some public sector specific arrangements that might also convey the right of the use. So there was a need to add some guidance. And so at the time, the board decided to publish in IPSASB 43 and a very important AG that basically helps prepare us to apply this principle. And once again, also has several elements. The first one is that an entity considers the substance rather the legal form of an arrangement. So it doesn't matter whether it is in paper, how it is written. What it matters is the substance of that arrangement, regardless of its form. So this is a very common principle in accounting, but the board thought that it would be worthwhile to put that written as an AG. On top of that, there are also three other elements that need to be considered by the entity when assessing whether in substance that arrangement is a contract or not. The first one, the contract involves willing parties. So if we don't have a willing party or a willing parties, it's not in substance a contract. So the terms of the contract creates rights and obligations to the parties. So if one of these is also missing, so if I only have rights or only have obligations, which is quite weird in all this, but kind of a theoretical approach in terms of possibilities, then falls through. We need to have both rights and obligations. And then finally, the remedy for non-performance is enforceable by law, so inside of the legal system. So this is very much consistent with the guidance that we have for financial instruments in IPSASB 41. Once again, when we, just to conclude this part of my my session, when we analyze the definition of a lease, we cannot analyze the definition of a lease on its own. We need to analyze the definition of a lease together with the definition of a contract, because both together translates the economic nature of the transaction that we are in, which is what it is a lease. Because of this, I don't know if the board wants to say something before going further. No, okay. So the issues paper has more details than what I've just said now. I didn't want to repeat much what is in the papers, but I wanted to give more background for information for the board to understand where the papers are from and where the discussion within the task force and the staff came from. So, with this background, staff and the task force divided the discussion into parts. So let's analyze these in terms of non-binding arrangements, and then let's analyze this topic with binding arrangements that are not contracts. So, for the first one, we end up concluding for non-binding arrangements, so we recommend the board not to extend the definition of a lease or of a contract, whatever it might be, the possibility, to non-binding arrangements, because a lease includes enforceable rights and obligations for the lessor and lessee. A non-binding arrangement does it only have for one or for rights or for obligations, not for both. And of course, the accounting model for non-binding arrangements in the future IPSASB on revenue and transfer expenses would apply to arrangements where the entity does not have both an enforceable right and enforceable obligation in the arrangement. What does this mean? It means that for this type of arrangements, there is a specific accounting model that is designed to apply to these types of transactions, but not in IPSASB 43. And before going to the one, I would like to receive the feedback from the board Ian on the non-binding arrangements recommendation.
Thanks, Sharon. So are we happy to agree no extension to non-binding arrangements? Okay, I'm not seeing any flags up. Trisha, you're hovering.
No.
Okay, so you're happy with non-binding arrangements being excluded. Okay, good. I think we're there on that one. So then move us on to the next one, Troy.
Thanks, Ian, and thanks the board for the confirmation. The other part of the discussion, it was also for us the most difficult in terms of the making that diving from the principles that we have in the revenue standard to the lease. So we end up recommending the board not to extend the binding the definition to binding arrangements that are not contracts for basically these three reasons. The details of the reasons are explained in the issues papers. No need for now, because I take for granted that the board read those reasons, but first of all, and following from my initial intervention, IPSAS 43 is designed to be applicable only to leases that are in substance contracts. So there is no guidance in IPSAS 43, and actually, even IPSAS 43 is not, because it is not designed to apply for arrangements that for which the enforceability is outside of the legal system. And the second one is that no one asked for such a change in the request for information. Actually, it was the other way around. Across the comments to the RFI, constituents acknowledged that they were not arrangements. What they had trouble is, okay, they are not leases. Okay, so what type of guidance should we then apply? So they were kind of asking this board to guide, okay, what type of guidance should we apply, acknowledging that these are not leases and that IFRS 16 or IPSAS 43 should not be applicable to these transactions. And of course, so just kind of a reminder to the board, especially for the newer board members, that a similar discussion like this one that we are having now took place when IPSAS 41 was approved, and the board also at the time decided that financial instruments should also be applicable to contracts, and because it is also an IFRS aligned standard from IFRS 9. And so based on these three reasons, we are recommending the board not to extend the definition to binding arrangements and to strict to arrangements that are in substance contracts. And with this, I'll pass the floor to Ian and the board. Thank you.
Thanks, Sean. So open up for comments. I think Liang has already put her views in on this. Camira, to you. And then to Patricia.
And thanks you all for the presentation. I think it's very helpful to understand all the concepts. And I only have a question on the agenda item in paragraph 12, where you are explaining the differences between the definition of a contract and the definition of a binding arrangement. And when you refer to the equivalent means, so that the contracts are only enforceable through the legal system, and then you explain how the equivalent means are not included in that concept. So that was a bit, I was not able to understand this difference very well. So if you could explain a bit more, thanks.
Yeah, thanks, Camira, and double thanks, because I also had trouble to understand, because I had to talk with Eileen from the revenue project for me to also to make that dive in and apnea on the topic. So the issue is that the equivalent means is related to being outside of the legal system. So we are talking about cabinet directives, ministerial instructions, memorandum of understandings. So those type of loose type of arrangements, because that don't hold in a court of law, and because they are to be only enforced by basically two departments that are under the same minister, and it is the minister that it is the holder of the enforcement of those arrangements, because both departments report to the same minister. Basically, it's that. So, and because they don't have because those arrangements cannot be enforced through in a court of law, because even those arrangements does not say that, it means that, well, they are not contracts. In substance, they are not contracts. They are other things. They might convey the right of the use, but as Lynn said initially, only by conveying the right of use does not make it a lease in terms of the standard that we have here. So using, if I'm able to use a metaphor, so for a duck to be a duck, it is not enough to have feathers of a duck. It needs to walk like a duck, it needs to quack like a duck. So it is like that metaphor, and just like a duck. So, and that's where the task force and staff landed, that it's not enough to convey the right of the use. Yeah, thanks.
Okay, thanks, Shweta. So go to Patricia next, and then to Lindy, and then to Todd.
Thank you. Thank you for your explanation. But I think you said me about talking about the enforceability. It's not about if it's a law or equivalent means. I think the main aspect here is if enforceability exists or not. And in my view, it's complicated to define. It's a binding arrangement, not contract. But what is a binding arrangement, not contract? That is in the scope of the. In my view, the main characteristic that we should consider is enforceability, and not if the decision is to move for binding arrangement. Thank you.
Thanks, Patricia. Ross, you wanted to come in.
Yeah, because again, we've had this debate before at the board when we did the financial instrument standard as well. And Joao did a good job of explaining it, but there was a couple nuances from that project that I think are important. So for one, I think it's difficult to define what's not something. So that's why AG3 is in IPSAS 43, because it tells you the three elements you need in substance to be a contract. So it's not about what might be a binding arrangement or not. It's about, is this a contract or not, or have the substance of a contract? That exact same guidance is in IPSAS 28 to support the financial instruments accounting. And one of the reasons that was needed is because financial instrument transactions like leases are a thing. It's not a definition we've created. So these types of transactions exist in the private sector, in the public sector, and in between the two sectors. So it's important you have a common understanding and definition, because if we expand the definition of what's a lease, then we're going to have public sector entities accounting for something that's a lease in the public sector that's not a lease in the private sector. And a lot of entities that are undertaking leasing transactions as an entity are private sector entities contracting with the public sector. So it's very important we have consistent guidance, because it's very much a legal arrangement when you have a lease. So often the lessee has to go and get insurance. They have to maintain the asset. That's all in the arrangement as part of their obligation to get the right of use. So that's why that definition is that way in the application guidance in both financial instruments and leases. And that's why it's important that we focus on what is a lease rather than trying to find things that we think are different in the public sector and describing that. Because one, I have, in all these discussions that Joao's brought me into, I've had this discussion, we've thought about it conceptually, but I haven't had anyone come to me with a practical example of something they think's a binding arrangement lease that's not a contract. So it's grounding it in that it needs to be a contract is what's important. And that's the same discussion we had 5-6 years ago, and probably even before my time when we did the first financial instrument standards way back when.
Tricia, you want to come back on that?
Only for understanding, the proposal is to retain the, yes, okay, thank you.
Okay, Thomas, you're sort of.
No, I'm patient as always. Okay, joking. No, I just wanted to re-emphasize what Ross just said. I think the CAG from the beginning onwards in the discussions, I remember the discussions around ED64, I think it was in 2018, and Malaysia, I don't know, where kind of the CAG already recommended only to deviate from IFRS 16 if there's a really good public sector reason, because of this consistency issue and the kind of over-sector transactions and arrangements. And therefore, I can only reconfirm what you said.
Thanks, Thomas. It's helpful to have that clarity. So I think it was Lindy next and then Todd.
Thank you. And it's just clarification. So I do agree. I wasn't forced to say that. Now I've lost what I want to say. So with AG3 and what we say in substance, right? So we always go back to Switzerland that can't contract in their own name. So if you have a lease in Switzerland, you are going to account for it in terms of the lease standard, right? So those would be in substance a lease agreement, although you can't contract. Because in the paper, we talk about binary arrangements was changed because of that, but we're not scoping those out. That is still in. Okay. Then the other thing I just wanted to also double check. We say in AG3 that you must have rights and obligations, but it doesn't need to be equal performance on both parties. So that means that if I do get an asset and a right to use the asset, I don't necessarily need to pay or to compensate the other party the fair value of the asset that I'm using. So concessionary leases then fall within the definition of a contract, essentially. Okay.
Ross.
Yes, I would agree. And that's, again, we've got precedent for this in concessionary loans and financial instruments. So if this didn't hold, our guidance on financial instruments, concessionary loans wouldn't work either.
And I just wanted to emphasize that, because we just say, you know, there must be rights and obligations, but it doesn't have to be equal performance on both, because that's specifically, we brought it into the financial instruments because of concession arrangements and because of donor arrangements, for example. So yes, we must just making sure we all understand the same implication on the lease side. Thanks.
Thanks, Lindy. Helpful clarification on that. Todd.
Thanks, Ian. And to start with, I agree with the recommendation. So my flag wasn't up to disagree with that, but I do take issue with one of the reasons that was given. And it's the reason where we say respondents to the RFI didn't request such a change. We put out a request for information, asking for information back, not for getting information about whether this thing should be considered within a lease arrangement or not. So I don't think that reason that we have provided in the paper should go anywhere, because I don't think it's actually relevant, because we didn't specifically ask a question of constituents around that.
Yeah, thanks, Todd. I think that point is well made. So what I'm hearing, I mean, I think the communication around this is going to be really important, because it clearly is difficult to get over, and we will need to really be clear about that difference. And I think the fact that a number of members have, you know, been kind of questioning, well, how does this sit alongside where we've gone on revenue and binding arrangements? I think we need to be really crisp about communicating, you know, what's our intention and what's our reasoning. So I think we'll have a look at that when we get into this. But I think at the moment, I'm sensing that members accept the arguments as to why we need to restrict this to contracts or things that are in substance contracts. Okay, thanks very much. So we will come back and have a look and make sure we're content with the communication. I think that, you know, a la Lynn's opening comments, I think it's going to be really, really important that we communicate what we've done in respect of the feedback that we've had and how we've used that. Lynn, is there anything else you want to observe at this point? We're happy to, so we're happy with that decision. Subject to communication, and then let's move on to the next slide. Sure. Oh, sorry, David.
Thank you. I think, I mean, I'm happy with the decision. Communications is obviously important, but comms at the time of issuing a standard will perhaps run the risk of being forgotten in a year or two's time when someone else is coming to use the standard. So I'm just raising a flag at the moment to suggest that we might need to consider whether or not there needs to be additional commentary somewhere. I mean, it's non-authoritative, it's at the back of the standard somewhere, but just to be quite clear, so that people don't forget these particular reasons.
Yeah, Lynn, on that, yeah.
So when I sort of think about communications, I think about multiple ways, for example, in the basis for conclusions, perhaps in an illustrative example, though I think on this particular point, it's probably better in the basis of conclusions, and we can take it into the drafting of the document that practitioners will eventually open up and use, so we can make sure that it's in there. But that's on the scoping point. I do think that equally the feedback statement is going to be important. So I think there's multiple communication points.
I think that's right, Lynn. And I mean, it's interesting. I thought it was very helpful, Joao, that you showed that application guidance. Perhaps, and this may come up in other areas, we might want to think where there are perhaps opportunities for implementation guidance, even although I think the AG actually is very helpful, but there may even be additional, you know, kind of what happens if I've got an arrangement that isn't a contract, actually would be relatively simple IG to write, would be consistent with BC's feedback statement, but on the other hand, actually, you know, that may be a kind of sort of plain English, and also people, you know, using the standard would go to that. So I think that's probably something maybe if we can leave that for staff and the task force to have a think about that. But I think that may come through in a number of areas, that the more that we can communicate that we have really addressed constituents' comments without, you know, disturbing the authoritative core or AG text, that may well help us, because this is complex stuff. Okay, thanks everyone. I thought that was a useful opening discussion. So move us on then.
Yeah, thanks Ian, and thanks the board for the discussion and confirmation. So following this, there was an instruction from the board at the June meeting for the staff and the task force to analyze and provide a recommendation to the board on whether or not the definition, we should provide a definition or simply a description of a concessionary lease. So we are talking about agenda item 9.2. So we end up concluding that a description of concessionary lease is enough for preparers to be able to apply not only IPSASB 43, but also the new guidance that we are developing here to include in IPSASB 43. Those are 4 reasons, but there are more in the papers and more analysis, so I just want to highlight these ones. So we came to understand that we can have several types of leases of below market terms, and some of those might not even be leases. For example, arrangements that convey the right of the use for 0 consideration. So it's only one element of that definition that is missing. So it is not a lease as defined. So we call it in the draft TD right of use assets in kind, just like it could have been a property, plant, equipment in kind, or goods in kind. So and therefore, but they would be kind of a subtype or a subtype of a concessionary, but not lease. But so, and these would have complexity in putting into a definition. So the second one is it prevents an apparent contradiction of labeling as a lease an arrangement that conveys the right to use an underlying asset without exchange of consideration. So it's so definitions should be short, sharp, crisp, clear to understand. If we have all these complexities, then a description it's better suited to explain a subset of transactions or of leases. The other one is, following, this was also discussed in the context of IPSASB 41 financial instruments of concessionary loans, and the board also, because of these complexities, end up saying, okay, let's only describe, and that description is also proposed in our draft TD in several places, in application guidance, also in the BC. So we have that guidance to help preparers to identify what is a concessionary lease without the need of a strict definition. And also because the main difference that this board is proposing in draft TD between a lease and concessionary lease is the measurement on initial recognition. Instead of being a cost measurement approach, which is the case of leases at market terms, in this case, in order to fully capture the economics of the transaction and the embedded subsidy in the transaction, the board is proposing in the draft TD, as decided in June, to measure it at the present value of market lease payments. That is another topic that we are to analyze further, and but not to be measured at cost. Otherwise, the cost would not capture the subsidy. So we are still to decide whether it would be fair value or present value of market lease payments, but definitely the decision is not to measure it at cost, because the cost would lead perhaps even to zero, and that would not capture the economics of the transaction. So because of these reasons, and in more detail are in the issues papers, we are recommending this board only to provide the descriptions. During this quarter, we received several feedback from and suggestions from board members on how to enhance that description. So draft TD shows in marked up those changes. And with this, I ask the board the views on the staff's and task force recommendation to go with a description of a concessionary lease.
Thanks, João. So open for comments from board members on whether they agree or not with the recommendation not to provide a definition. Patricia, and then Lindy.
Thank you. I agree with the recommendation, but I think it's in the text, the proposed text, it's not well articulated. For example, in the page 46, about the diagram about the lessor, after identify that the transaction covered the right to use an underlying asset for zero consideration, you classify in leasing, operating, and financial leasing. It's not lease, it's outside of, I think this is the decision, yes?
Yeah, sure.
Yes, very good point. So staff and task force also discussed this, and the document is not yet finalized because we want to receive the feedback from the board on this first before going to the second step. Yes, it's not a lease, it's not the purpose, and we'll have to explain that. That explanation is not here, but we need to have still this classification. And why is that? Because whether it is because we need to identify where the subsidy is embedded, because if the subsidy is embedded in an operating lease, or whether it is embedded in the finance lease, and the accounting of a finance lease and an operating lease is different. By saying this, we are not saying that the transaction is a lease. What we need is, if it would be a lease, what type of transaction would be? A finance lease or an operating lease? Only for the objective of identify where the subsidy is embedded. I'm going to just give an example before passing to the board. If in a finance lease, if it is a concessionary finance lease or a lease for, in this case, an arrangement that conveys the right of the use in a finance lease, it means that the underlying asset is given or transferred for free. So it means that there is no net investment in the lease. There is no consideration to receive back for the lessor, and that is an accounting that is completely different. Whether if that arrangement, instead of being a finance lease, it would be an operating lease, because the object of the subsidy would not be related to the underlying asset, but to the stream of cash flows that the lessor would receive. So there is further explanation that needs to be done here, and I'd like also to receive the board if it agrees with this thinking.
I mean, I think, João, this is a classic example of where less is more, actually. I think what Patricia was saying was that the explanation wasn't clear. And, you know, some of this goes into the fact that we've got two models for, you know, different models for lessee and lessor. And I think it's about clear explanation of the principles, not more detail. I think that's probably, if that's okay, Patricia, a sort of summation of what you were agreeing with it, but it's not communicated as well as clearly. And again, we're thinking about translation there and so on, I think.
In my view, I just based on the principles, the transaction is not a lease. Then the prepare have to consider another IPSAS. And I think we don't you will have to be so prescriptive, because there are some design, some kinds of design. Yes, I think you should give guidance for the preparers, decide if it's a lease or not. If it's a lease, okay, it's necessary to classify, but it's not a lease in the perspective of prepare. Analyze the IPSAS standard. Yeah, thank you.
Yeah, thanks, Patricia. I think that's very good to bring that user perspective in. Ross.
Yeah, I agree with you, Patricia. And I think actually, when I look at this topic, I really always take it back to concessionary loans and what we have in the guidance there. And there is guidance in the financial instrument standards that basically says what you said. When you've got something that looks and feels like a loan, but in substance is just a grant, it's not a financial instrument. You just account for the revenue you're receiving. You look at the substance, not the legal form of the arrangement. I think we need the same thing. If you've got something where you're getting no consideration back, structured as a lease, I think in substance, you've been given a subsidy. They've used the lease as the vehicle. So I like the idea of the description, like in concessionary loans, for that reason, because what you have in a concessionary lease or a concessionary loan is you have a substance, a grant that's been legally given through another instrument, either a financial instrument or a lease. Now you have to assess whether that is a two-part transaction where you have a subsidy and the financial instrument or the concessionary lease, or just a grant. You're not getting anything back. So in substance, you don't have a lease. So to your point, I think we can clarify that.
I mean, I think one thing that emerges from this is it might be worth actually just looking at the sort of IG information that we give in financial instruments in terms of where there is a parallel that actually probably we should consider adding something that expresses that in the context of the leasing standard. Because as you say, we have covered quite a lot of these things, and I think we should think about how we've communicated it in financial instruments, and because a lot of the same is going to come here. And I think Patricia's absolutely right. This needs to be accessible for users. And if it isn't a lease, well, where do I go for my guidance? Those are the sorts of things. And then it's back to Lynn's point that yes, basis for conclusions, yes, feedback statement or IGs, and let's just think about how the mix of those works for our constituents. So in the meantime, I've had various flags up. So I think it was Lindy, then Lucy, then Mari, and then Todd.
Thank you. So I hear what you're saying and can understand the logic. I think this is, though, quite a principle decision and quite a broad cross-cutting principle. So with concessionary loans, it's described when you look at the standard and what you must do when you have concessionary loans, you account for it at fair value as you would for any other loan. And you are pointed to the other standards to look at how you recognize off-market portion. And we did the same with heritage assets and infrastructure because it's a PPE. There's no different accounting. It fits within that category. But with what we're proposing now with concessionary leases, we are proposing a different initial measurement. So there is a slight difference in accounting that is proposed. And then I wonder, doesn't that call for a definition? So I guess it's really what calls for a definition or not. Is it based on the overall topic, or is it based on the accounting consequences in the standard? Not just disclosures. So for example, in IPSAS 23, we have non-exchange transactions defined, but we have taxes defined separately because we go into quite a lot of detail on the measurement and recognition of the taxes. So whatever the answer is, I think maybe it is a principal thing that we might want to look at going forward, because as we develop our own public sector specific standards and have these, we might want to just understand when we do and when we don't. So I think that that's just my elevator pitch.
Okay, thanks, Cindy. So I'll just take the round of comments from members before going back to staff. So Lucy, you are next, and then Mari and Todd and Leanne.
Thank you, Chair, and thank you, Joel, for the useful presentation. I agree actually with the recommendation, but I think it would be also useful to take into account the description of concessionary leases that is provided in the RFI, where we said that lease is at below market terms implies the existence of a concession or subsidy in kind, which can be determined as the difference between the market value of the right to use an asset and the lease's stated consideration, which is the contract value. Thank you.
Thanks, Lucy. Yeah, we've already written it before, and let's use it again consistently if it works. Mari, then Todd, then Liang.
Thank you. My point of view is as same as Patricia's point of view, and it is so complex to include the concessional lease that the case is regarded as a grant, and so it is I am so in confusion because the 18A page 41, it is carefully used the word transaction, not the instead of lease is a market terms at below market terms, and at 18B it includes the lease and concessional lease, and it in case of the non-exchange component, it could include non-exchange component, and so the agenda item 9.2.2, paragraph 5, the second paragraph is so confusing, and so it is necessary to identify the case of the concessional case, concessional lease, and so I definitely thank you.
Thanks, Mari. As ever, if the board is struggling in terms of understanding a concept, we need to make sure we're clear in our communication, because otherwise our users won't be. So thanks very much, Mari. Todd and then Liang.
Thanks, Ian. And in terms of the question about definition or description, I think I'm relaxed as to either, but we do need to address what a concessionary lease is. I think I'm on similar points to Patricia and to Mari. I got quite confused in reading through some of these papers, and I think what we're dealing with here and the way that we're describing a lease, the contract, the consideration, etc., we should only use the term lease in these papers where we mean that. We start talking about leases at zero or nominal. Well, they're not leases if there isn't consideration. So don't talk about leases at zero, or because they're not leases as defined. And I think that's where a lot of the confusion starts to come in, because I started reading this and I got quite lost until I could manage to break through that. And it took a while to break through that. So there is some work that we need to do here to be absolutely clear and talk about leases when we mean leases as defined, contract-like, etc., and use different terms when we don't mean that. And it's all muddled right now.
Thanks, Todd. Liang.
Yes, actually, I have same feeling as the board member. It is quite confused. I'm just struggling to understand the rationale. My understanding is if it is some arrangement to use an answer, but you have no consideration. It is not a lease. That's fine. But when I read the paper, it states everywhere concession lease. And from the term concession lease, people may think automatically it is a lease. But we know that actually, if there is no consideration, it is not a lease. So I think maybe we should try to revise it a little, but I understand it is quite difficult. If we do not say it as consensual lease, maybe we should use a long sentence to say to have the right to use an asset, and but the no consideration, without consideration. So I think it is quite difficult to make it clear.
Thank you, Liang. I mean, I think, if you like, what I take from the discussion that we've had is that members are supportive of the approach of having a description, but what we do need to do is, having taken the decision in terms of the scope as to what is a lease and what is not, then we need to think about the terminology very carefully and very deliberately, and use that very carefully and deliberately. And I know we found this when we were drafting the RFI, you know, and we talk about lease type arrangements and so on, but maybe we need to move further away to something different, so that when it isn't a lease, it's something, not a duck, but anyway, you know, so I think that point has been made very clearly by a number of members. And then I think there is this point about how we actually deal with this. I think certainly where we've got precedent elsewhere in terms of how we convey this, let's look at concessionary loans. Let's see what we've got there that helps us in terms of the approach and being consistent about that. And then it, you know, overall, I think back to Lynn's opening comment, we just need to think very carefully about communication, because there are a range of arrangements here, and clearly it's helping people really work through, well, okay, if I'm not in a lease, I'm in something else. What is that something else, and where do I go for the guidance on that? Sort of, if members are content on that summary, then I'll go back to Lucy and to Adrienne.
Thank you, Chair. I don't know, it might be useful. This might be useful, but I just want to share that in our jurisdiction, for instance, in the Commission on Audit, it is building provincial satellite auditing offices in all the provinces, and it enters into what they call usufruct agreement that would allow the Commission on Audit to build the auditing of a provincial satellite auditing office, and the local government unit would provide the land for no consideration, for zero consideration, and COA is authorized to use it for like 30 to 50 years. So we don't call it the lease, a concessionary lease, but we call it usufruct agreement. Thank you.
Thanks, Lucy. Adrienne.
Why don't we make it simple and call them concessionary arrangements?
Thanks, Adrienne. I think, as ever, it's always a lot easier when you know, it's somebody who's not a native English speaker can kind of cut through these things. It's like your comment about excess capacity and so on. Very helpful. Thank you. So I think, you know, from a task force and staff point of view, does that help in terms of members agree the principle, but it's actually working on communication that is going to be the challenge here? Sure.
Yeah, thanks. So, thanks for your comments, but now you are on the hook because perhaps I will reach out to you, the board members that made the comments, just to make sure that I have addressed appropriately your comments in the revised version of the ED that I'll bring for the next meeting. So, watch out your emails. Thank you.
Thanks in advance to everyone. Okay, move us on to the next paper then, Joao.
Thanks, Ian. So the other topic is the sale and leaseback at below market terms. So agenda item 9.2.3, and this is also the result of an instruction from the June meeting. So just a brief background before jumping into the recommendation. So as you all know, in IPSAS 43, there are two situations where we can have sale and leasebacks. And the first one is where the sale is at above market terms, that it is implied that it is an additional financing. And where the sale is at below market terms, it is considered as a prepayment of the lease. And the IPSAS 43 provides the guidance on how to account for those two situations. What it came to our knowledge is that through an example in a jurisdiction, is that there are examples in the public sector where we can have a sale at market terms, but it's the lease back that it is made at below market terms. So, and with the intention to provide a subsidy at the outset of that transaction. But because the sale and lease back are negotiated as a package, as a single one, so it means that we need the preparer would need to assess in that package, because it's two separate transactions, but negotiated with the same parties at the same time, would need to assess where whether there is or not a subsidy and given in the lease back, because there isn't a prepayment to the sale, basically, where that sale would be at below market terms. So we came this to our understanding. Okay, and because the intention is the same as any other concessionary lease, we came to the conclusion then, okay, this is a very much public sector specific case. It's not addressed in IPSAS 43, and then perhaps we would need to provide different guidance to help prepare us on how to manage these situations if they occur also in those jurisdictions. I just want to make a pause here to see if the board is happy with my explanation or if I need to say anything else before going to the recommendation. Ian.
I'm not seeing any flags up, so I'll continue, Joao.
Yeah, thanks, Ian, and thanks to the board for confirmation. So, because of this public sector specific situation, our recommendation, the staff and task force, is to amend IPSAS 43 requirements on sale and leaseback transactions to address the situation where the below market terms of the leaseback is not linked to a prepayment. So this means that the agreed sale purchase price of the underlying asset equals its fair value. There's no prepayment of the leaseback, so may be an embedded concession in the leaseback, and this needs to be assessed under the same guidance we are providing for the remaining concessionary lease accounting. So the intention and other information that might be helpful to identify whether that is a concession or not. So with this, I ask the board if it agrees with the staff and task force recommendation. Just before passing, we did provide some suggesting amendment in terms of the paragraph. It's in paragraph 97A in page 44 of the papers that you have in front of you. So that is the idea. I'm more than happy to receive offline any editorials to enhance, if any clarity, because ourselves we are not yet sure if this captures the idea. So more than happy to receive any feedback on the drafting also, but we can discuss that offline. But just want the confirmation from the board if it agrees that something needs to be written or amended in IPSASB 43 to address this specific situation. Thank you.
Thanks, Ralph. So the question is whether the board agrees with the approach. Obviously, there's some drafting that needs to be finessed if it does, but I think we're on the debate about does the board agree that you know, we need to reflect these transactions in this way. Yeah, Lucy.
Thank you, Chair. Thank you, Joel. I agree with the staff recommendation, but I think additionally it might be helpful to the users if we emphasize the objective of leasebacks, which is either to provide a subsidy by granting the right to use an underlying asset at below market terms, or to obtain cash by selling the underlying asset and returning the proceeds in the form of a lease payments, particularly when the assets sales price and fair value are equal. So I think it might be more understood by the users. Thank you.
Thanks, Lucy. Lynn, did you want to come in on that one?
Sorry, one thing we didn't say is we have worked up illustrative examples. So if the board agrees with this decision, our intention would be to include illustrative examples to help on this.
Okay. Any other comments on this? So I think we're agreeing that we need to reflect this. Obviously, we've got that proposed drafting in 97A. So if anybody has comments on that drafting, if they can pass that back. And then if we can then have a look at the proposed additional non-authoritative guidance, that would be helpful. Good. Back to you, João.
Thanks, Ian, and thanks the board for the confirmation. So I'll be waiting then for any further suggestions to that paragraph. So we are now jumping to agenda item 9.2.5. So I ask the board members to move a few pages, as Lynn said before, and Ian. So we are now talking about 9.2.4. We are waiting then for the COV discussion in the measurement project. So, this is the first topic on the RFIs, on the RFI that this board published. And I'd like also to make a brief introduction to this item, but also more specific than the ones that I've made before, because it also encompasses the other three agenda items. So, and the first of all is that, as you might have noticed, the recommendation is quite similar because we have basically from different reasons, because we are addressing different types of arrangements, but landing to the same conclusion. So in this case, in the arrangements allowing the right of the use, we did receive in the comment letters respondents saying that they did have this type of arrangements, but they were also saying that they did not meet all the strict criteria that they have in IPSASB 43. So although they said, okay, the other party can use the asset, but did not have perhaps the full economic benefits of using that asset, which is one of that criteria, or it did not have the right to control, to direct the use of the asset. So there was always some pieces of that puzzle that was missing in those arrangements. But nevertheless, those arrangements do grant the right to use the asset. So because of this, staff also went to see and discuss this with the task force. We have also other literature, service concessions, arrangements, where there is also arrangement between two parties, where one party grants the right to use, but in a different way, with different types of rights to another party. So we came to the conclusion that if those arrangements are not within IPSAS 43, so they are not leases, and if they are not within a service concession, so they might be perhaps intangibles if, of course, they also meet the criteria that we have in IPSAS 31. That criteria is in the issues papers. I'll not go into details now. So we came to the conclusion that, and this was drawn from the comments, is that preparers want more guidance on the geography, on where they should look for the guidance, just similar to the session that we had before in the previous item, where they should look for that guidance. So if that's the case, we came to the conclusion so that this is not a standard, does not demand a standard setting solution from this board, but in the normal way, instead of issuing standards or amendments to standards, but providing other types of guidance, like a feedback statement, staff Q&A, on how these arrangements allow allowing the right of use fit in IPSASB's literature. And that's why this is our recommendation, because we do already have guidance on how to deal with these transactions. I should also highlight that when this board issued RFI, it issued also IPSAS 43, and IPSAS 43 brought extensive guidance on how to identify a lease that we did not have with IPSAS 13. So it would be helpful also for preparers to know, okay, how that guidance matches with the other guidance that you also have, service concessions, intangible assets, and where they should look and what are the criteria that they should assess in doing that analysis. That's why our recommendation is basically to add basis for conclusions, explaining this rationale. We've provided some drafting. We are happy to receive any feedback if the board agrees with this recommendation to enhance those BCs, and of course publish a feedback statement and staff Q&A on this topic. And with this, I'll pass over to you, Ian. Thank you.
Thank you, Jean. So open for comments from board members on this. I think you were marginally quicker on the draw there, Lindy, than Todd. It was pretty close.
I agree. I would, however, request that we signpost in the scope of IPSAS 23 that we are including concessionary leases or the rights to use an asset, so that people know upfront that there will be a guidance. So we've got the guidance in there and we're changing IPSAS 23, but I think it would be useful to have some sort of scoping upfront so people know that when they looking for it, they know they don't have to go through the standard, they know upfront. Thanks.
Thanks, Lindy. And I think we're sort of probably talking about concessionary arrangements here, Evie Adrian's point. Todd, and then to Patricia.
Thanks, Ian. I agree with the recommendation in terms of feedback statements, staff Q&As and that sort of thing. I'm just struggling a little bit with how much should be going into the BCs on leases around things that have got nothing to do with leases. So yes, we may want to reference in our BCs and leases that we issued an RFI to try and better understand some lease type arrangements, and we landed on concessionary leases, and there are a whole lot of things we didn't land on. But I don't think we want to go into any more detail in our BCs there, because anyone coming to IPSAS 43 are looking at leases and what they need to do about leases. They're not going to be looking for anything else. So if we want to provide some answers to that, the Q&A etc. is a good way. If we want to embed any of that within our authoritative or even non-authoritative literature, it doesn't feel like it belongs in 43, and we perhaps need to think about, do we need something in IPSAS 31, IPSAS 32, these other things, if that's relevant. And I don't know whether we want to go that far here, but it feels like those would be the better places if we think that those are relevant to some of the things that came out of the RFI.
Thanks, Todd. I mean, I think let's come back and have a look at this point in terms of geography. I think, you know, perhaps following on from your point, clearly we're not wanting to interfere with the authoritative guidance in IPSAS 43, but I do think that one of the things that maybe we could explore is an IG on this that sort of then helps you with that, you know, which helps you to kind of, it underpins, if you like, the scoping that it's somewhere else and gets you potentially the signposting to somewhere else without actually being authoritative. And then I think you're right, you know, then we kind of, and this is to Lindy's point, then I think on 23, actually we do need to think, well, are there any consequential amendments elsewhere to the authoritative material where we want to explicitly scope these in? So I think we've got to get that, if you like, if we've got the principles agreed by the board today, then perhaps we need to think, we need to ask the task force to go away and think about that. Okay, what's the combination of you know, maybe non-authoritative guidance, certainly BCs, you know, because I think, you know, one of the challenges is, yes, we can do a feedback statement, but people aren't going to look at the feedback statement. They're going to think, oh, I've got something that's like a lease. I'll go and have a look at the lease standard. So I think that's it. It's that, how do we kind of make this work for constituents? And I think that communication point is probably something we can, if we can ask the task force to look at. I'll go to Patricia and then to David.
Yes, it's aligned, and my suggestion is aligned with this. I think the main issue here is identify if this event, the transaction is or not a lease. And maybe a diagram with the characteristics can explain in this no, because this, no, because this one. I think it can be helpful for the preparers or for other stakeholders. And my suggestion would be to include non-authoritative guidance. Thank you.
Thanks, Patricia. So I think that concept of a diagram may be appropriate. And again, I think if we go back, leave the task force to have a think about that. I mean, I think there are a number of tools here and they're not mutually exclusive. So, you know, I think that's something to take away once the board's given its decisions. David and then Lindy.
Thank you very much. I just really wanted to support the other comments to suggest that we make sure that there is guidance in the appropriate place. And I agree with Todd, it's probably not necessarily in 43. Signposted in 43, yes, but it needs to be, well, there may need to be guidance in the standard that you end up in, because these questions obviously are important to constituents. So we need to make sure we provide the answers in the right place.
Thanks, David. Lindy, back to you.
So sorry. The question I have is how or when do we put this in the new revenue standard? I guess it's a timing thing of when we would approve this, because I would think that we would want it. I don't know if it's a consequential of this project. We probably should put it in the revenue project. So it's just an understanding of which staff or which group is going to take responsibility for this, and the timing. Thanks.
Thanks, Lindy. Perennial problem we're having at the moment. Ross, to you on that one.
Yeah, I mean, feel like a broken record because with all these projects being interrelated, we're having this a lot. But just to remind, we're developing an EED right now. So I don't think we can add guidance that we're proposing until it becomes guidance. So there might have to be consequentials coming out of the final changes to leases that also affect revenue, which at that time should hopefully be a standard, not in development. So we're keeping track of it, but it is complicated. And I think just let us work through it and come back with the solution, because I think deciding on the spot what to do always causes problems, because it's always more complicated than just let's put it here or let's reference that. This is an exposure draft we're developing now, and I think it's important that we publish that exposure draft, get the feedback, and then decide the consequentials we need to make to whatever standards exist at that point.
Thanks, Ross. So I think, probably we need to sort of capture that thinking, that approach somewhere in the document that goes out, so that constituents understand that we know we've got this.
Or for us to know as well, so we start asking you that question. So it must be a decision somewhere, I think, document.
Yeah. I mean, obviously the prior point is there's a staff paper in terms of what's the specific handling in terms of what goes in this CD. But then I think, if there's something that we know we're going to need to do subsequently, we should at least note that somewhere wherever that seems appropriate. And it's not really BCs because it's only a temporary. So I think just if staff can have a think about how we make sure we communicate that we've logged it, we know we're going to do something, it's just not here because of where the revenue project is at this point in time. Good. Okay. So I think that's the discussion on right of use. I think we're content with the approach. It's very much about how it's communicated and where it's communicated. Okay, João?
Thanks, Ian. Thanks the board for the very helpful discussion and also confirmation on the recommendation. So moving forward for the next agenda item 9.2.6. So it's a second item of the request for information. Shared properties with or without a lease arrangement in place. In this situation, so we the issues paper discuss two situations. So arrangements with a lease arrangement in place and arrangements without a lease arrangement in place. So staff and the task force analyze this situation. So if there is a lease arrangement in place and if that lease is a true lease, just like we have it in IPSAS 43. So there is already guidance in IPSAS 43 for the preparers to apply the counting accordingly. However, if the transaction is not a lease, then so if there is no lease arrangement in place, so it's something else. So they should look to another place. So the very same discussion that we just had before on the geography where preparers should look. So because of that, staff and the task force landed to the same recommendation, of course, coming from different reasons because it's from a different type of situations that we are analyzing. Just to add BCs in IPSAS 43 and publish a feedback statement. Of course, now in this case, we'll take into consideration the feedback from the board from the previous one on how these BCs should be written, because we will take these all as a package, so it will not be individual as they are now. So even the BCs that the staff and the task force put there, it's just to see, to sustain the recommendation. It's not that it will be the final BCs that we'll have there. So they will be redrafted in the same way that we have been redrafting after each meeting. So in this case, also the same recommendation on the staff Q&A and feedback statement, because we already have sufficient guidance now to identify and account for these transactions. So and with this, I'll pass the floor to the board, Ian. Thank you.
Thanks very much, João. So I want to check that the board, as you said, we can talk about the detail, we'll see the details back, but the question is, are we content with the overall approach? Patricia on this.
Thank you. I have a question about the paragraph 9. What was considered not have a specified I could understand the criteria here. Yeah.
Yeah, thanks, Ian. So in the initial introduction, I showed the definition of a lease. I cannot go back now because otherwise I'll be pulling back quite a lot. But part of the definition of a lease says that there needs to be a period of time. So this means that we need to have that element, the identification of a period of time, a specific time. If there is no time identified, so the time is indefinite, so we don't know when it will end, when it will end the arrangement, we cannot apply IPSAS 43 basically, because for IPSAS 43 requires for us to apply the discounted cash flows and the measurement of the lease liability. We need to know and other things about the cancellation options, moments, the lease term, all involves of identification of a specific time. And what we were told through the comments to RFI is that many of these arrangements don't have a specified period of time where they will be in place, basically. So, and because of this, we came to the conclusion. So we cannot apply IPSAS 43. Then we or the preparers cannot apply IPSAS 43. They need to apply other standard to account for those arrangements. I hope it is clear, Ian.
Tricia, you want to come back on that?
Yes, in IPSAS 43, paragraph 19, the period of time is non-cancelable period of time. And if I have the contract does not define the period, but it's not possible to cancel, the period is the useful life of the assets. For example, I think it's necessary to refine the analysis about the period of time. Could you understand me? If the contract is not defined, but it's not possible to cancel, and the asset has a useful life, the time of the contract is a useful life of the assets. I think it's a need to better conciliate or better align with the requirements in IPSAS 43. Thank you.
Thanks, Patricia. I mean, it certainly seems to me that, you know, going back to how you set this up in the first place, João, actually, there are three key components, if you like, of the definition. And then I think, you know, we've explored, well, what happens if it isn't a contract? I think, you know, what we're doing here is saying, well, what happens if it's indeterminate in terms of the length, and so almost for each of those three things that might move you somewhere else, that's actually where perhaps an IG here which then directed you might help you, because clearly there is already authoritative guidance, you know, AG's core text and so on, but just to actually really help people with that, well, what happens if I don't have this, where do I go, kind of thing. So it's not disturbing what's in the standard, but it actually demonstrates that we thought about it, and then it takes people to the right place. So I think that, you know, maybe if the task force can think about it in that way, because, you know, what occurred to me is actually these are particular examples, but actually there's an overall principle here, and that might help people, because obviously there's a very broad range of types of arrangement that we're trying to, you know, provide guidance or think, well, at some stage elsewhere, maybe, you know, we may need to provide some more guidance or something like that. Liang, you want to come in?
I also have a comment about the paragraph 9, because I think in practice, the terms of the arrangement may be complex. So it may not be always that such transaction will be scoped in IPSASB 9 or IPSASB 23, because maybe it is not revenue at all. So I would suggest if we issue some guidance, we may say scoping IPSASB 9 or 2023 or other applicable standard as appropriate.
Thanks, Liang. Helpful. I mean, I think that is the problem. We've got so many different potential arrangements here, and it's trying to be helpful without creating problems elsewhere. Okay, so I think, again, communication and how do we signpost, but we're content with the conclusion from the task force. So then move us on to the next example, João.
Thanks, Ian. Thanks the board, staff, and the task force will take into consideration for this discussion going forward and bring those changes. So agenda item 9.2.7 on access rights. The issues paper provides a more extensive analysis, kind of how our current guidance can be applicable to access rights. So it's kind of our understanding, and we based on the comments that we received to the RFI, and we also added an appendix A with several types of access rights, just to show, how to say, the complexity of these types of arrangements, and providing the names that constituents gave and a brief description that it was given by them. And once again, we came to the same conclusion. So there are several elements that, of course, they have access rights. They many times use the asset, but they don't have the same types of rights that we have in IPSAS 43, and so they are only giving access to those assets. So once again, we came to the same conclusion that the answer might be to provide a feedback statement and a staff question and answer on how access rights fit in IPSASB's literature. So we have IPSAS 31, tangible assets, IPSAS 32, service concession arrangements, because some constituents raise the possibility that those arrangements might also be service concession arrangements. And we now also have IPSAS 43, so we have already quite a good guidance on how to help them prepare us to find the right answers for the transactions that they have in place. So with this, I'll ask the board if they agree with the staff and task force recommendation. Thank you.
Thanks, João. Comments from the board? I mean, I think, as you say, it covers quite a range of different types of transaction. And I wonder whether one of the things we should just tease out is perhaps the two different perspectives. You know, if I give an access right and if I receive an access right, and there may also be nuances as to if I give a right, you know, it depends on actually how I'm thinking about, you know, how I'm actually measuring the asset, because if it's historical cost, then there might be no impact on the original cost. I don't know if you're holding some form of valuation, there might be some impact through there. So it might be that actually it would be helpful to kind of think about, to explicitly think about this from the two different angles, because clearly if I gain an access right, I've gained, so I, you know, and I'm struggling a bit, but, you know, I think that's, if we can separate between the two, because we've got two models within IPSAS 43, but also, you know, you're going to have two different situations. Ross and then David.
Yeah, I just think we have to be careful on how much we're going to say about access rights in a leasing standard and leasing ED. So we don't want to start interpreting 6 or 7 standards about an issue that really isn't a leasing issue. So maybe we're logging things for future work program or rights too, but I mean, I think we need to be a little careful how deep we go.
Yeah, I mean, I think that's right. I'm just saying, I think perhaps there's a little bit more we need to go before we form that decision, and we'll need to think about that and tease that out when we think about, for example, a feedback statement. So, David.
Thanks, Ian. I mean, I think this does bring up a question that's been perhaps rumbling around in the back of my mind, and that is, from what perspective are we looking at some of these transactions or arrangements or whatever you want to call them? But particularly, I think, yeah, because looking at some of the things here, the easements and way leaves, for example, if you're not, as you said, if you're on historical cost basis, model, it probably doesn't make much difference. But if you're certainly on a current value model, the valuers would take into account easement and way leaves when they were valuing the property that was affected. So you've actually got something there already. So I think you're right. I think more work probably needs to be done to sort of tease out some of these things, just to make sure that when we are signposting where preparers might need to look at these things, even if they are an issue, which they might not be an issue, then we can be clear as to where we're directing them and whether or not we need any additional guidance, which we may not.
Lynn.
So I guess I just want to be clear, which is Ross's point, which is, what do we want to do on this as part of our leases project, when in effect we've concluded that we don't think they are leases? And if you are asking the task force to do something on this, then let's be clear on that, but be clear on the context in which that's being asked, because it's not a leases issue.
I think that's quite right, Lynn. And I think actually let's, I think with the instruction, if we can just take this one away and work out, is there anything that's relevant? Because I'm thinking, what comes to my mind, for example, is we've got something in the draft IPSASB 45, which is on there's something in there on land over and under infrastructure assets. Is that relevant? So that I just think it's actually just locating, have we got something, or is there a gap that we intend to fill later? Or is it, I don't know, so I think if perhaps that's something more for staff just to have a think about the various different dimensions and then to make a recommendation, because I think you're right, Lynn. I understand, actually we're saying this isn't a lease, but it's just a question of, because constituents have raised these things. I think we need to work out, well, have we got something elsewhere that we can direct them to, or actually are we saying this is potentially something at some stage that we might do some work on? I'm not committing us to doing anything, David. I'm just saying, because I think that goes back to the feedback statement, because it might be that we say, well, okay, actually constituents might want some guidance in here, but actually that's going to take some time to do, and therefore it's actually something that needs to go in a future work programme proposal against other potential projects. So I think that's perhaps the bit of further thinking that's required to help us to feedback on this, if that makes sense. And I think, staff as a group can do that. And then if there's something that needs consideration in the context of the leases project, that's fine. Equally, it might be somewhere else. Okay. I'm going to suggest we take a break at that point before we move on to the final item. And also, I think it would be helpful if we could do a quick walk through the updated draft guidance, so members can give any comments on that. What that obviously raises, though, is the question of we would then be ahead on the meeting agenda, and so the proposal is that actually what we do is then having completed that, then we move into the presentation that Joe is going to give in terms of the introduction to differential reporting, so that we do that item this afternoon. Okay, so with that, we break for lunch. And if we can be back here at 1:30 and just move into the final paper and then walk through the updated draft. Thanks, everyone. Excellent. I can see we've got you trained well. Just need to sort the chairman out now. Um, so welcome back everyone for the afternoon session. So I've lost you now. Let's just finish off the remaining discussions on lease type arrangements, and then we'll just walk through the updated draft to pick up any additional comments before we move on to the briefing on differential reporting. So João, back to you.
Thanks, Ian. So we are at the last agenda item for this session. So agenda item 9.2.8 on social housing rental arrangements. So when staff and the task force analyzed these arrangements that were provided by the comment letters, there are some characteristics that we've put in the issues papers. So one of those is about arrangements for zero normal consideration. We have already discussed this type of arrangements, but there are also others that don't have a specified term. So I had the opportunity to talk with Patricia during the lunchtime about what does it mean lack of specified term. So in fact, the issues paper doesn't go into the level of detail because it was not very much the purpose to go into those levels, but just to give kind of high level what is at stake and is received from the constituents is in those type of arrangements where simply there is no reference to any type of period. There is no for which the arrangement will be in place. There is no reference to cancellation period, nothing. So as we are now dealing with, how to say, a more loose type of arrangements that don't have all the elements needed or required when we are talking about contracts, many times they don't even put these types of references to periods. So in this, it was in these circumstances that we are analyzing what we mean by lack of a period of a specified term. Of course, this is clarification that needs to be done if the board agrees with the staff and the task force recommendation, with a feedback statement and staff Q&A on also on how social housing rental arrangements fit in IPSASB's literature, that we can draw also from those examples that came from constituents into those documents that we are proposing to the board. And with this, I'll open the floor, Ian. Thank you.
Thank you, João. So open up for comments on from members on the social housing recommendation. No, I think we're content with that. Maybe it's just after lunch, or maybe we actually debate all the issues before lunch. But anyway. Okay, so I think with that, we're through the issues papers. Just to make one clarification in case anybody went away with a misapprehension on that discussion on access rights before lunch, that I was not implying that this suddenly becomes part of the update of the property, plants and equipment standard. There was no intention that that's an additional issue there or further work required. What I was trying to say is if we have guidance elsewhere, then let's signpost to it. But equally, and I think this is a very important thing that we would need to communicate, is if there are areas where we think there is a gap in guidance as a result of the feedback that we've had from constituents, that we're honest about that, and that we then feed that into discussions about, items that we might add to our future work plan, but that people are clear that then it has to take its place as an issue against all the other issues. And we as a board will then need to work our way through those and work out where we feel the priorities are based on feedback from constituents. So just to underline that in case anybody went away with, I'm adding another subject to issue to ED 78, absolutely not the case. Okay, so with that, the final item I think is actually we've got the updated draft through to walk through, and the idea is literally we just do a walk through that, which Ross will lead us through as we did turning the pages, and we'll just pick up member comments as we go through that. Okay.
Thanks. And so if you're looking at the PDF pack, this is page 33. It's the cover of IPSA's 43 amendments. That's the first page, and then you'll see the changes to the title there. Page 2.
Todd.
Sorry,
this is always a good start when
Sorry,
you're
I'm
only
on the title. I'm on the title. I agree that this is about concessionary leases and IPSAS 43, but it grates on me when the first thing it says IPSAS 23 when you open it, if this is really about concessionary leases and IPSAS 43. And I think we need to have 43 first, because I think 23 is predominantly consequentials. So I think I'm agreeing with the title, but certainly not the way that it's then structured. So if we're going to leave the structure, I think we're going to need to revisit the title. If we're prepared to revisit the way that this is set out, I'm happy with the title.
Ross.
Yeah, I take your point. When we're normally making consequentials like this nature, we usually put them in sequential order, but maybe the better way to do it is have the 43 amendments and call the amendments to 23 consequentials as a result of it, and we can put them at the back.
And I think there's also a point here which goes back to the titling and the terminology. So I think the title is probably the last thing that will settle down. But I think, you know, there's that point about if it's a lease, call it a lease. If it's something else, it could be a concessionary arrangement or something else. So, you know, I think if we leave that I think will fall out of where we get to on clarifying and making consistent terminology elsewhere. But thank you, Todd, for bringing that up. And I agree with you in terms of it looks odd. Anyway, okay. So we move on from the title page.
Page 2 is just the boilerplate. Nothing there. Page 3 is the request for comments.
Todd.
Sorry about this, but we are talking about lease type arrangements or lease related matters in a few places on this page, which is consistent with sort of the RFI because it was about lease related stuff. But now that we've landed on quite a tight definition of leases, what we're terming lease related isn't actually leases as we're defining it. And I just wonder whether, even if it's a footnote or something, we can bridge that, because as I said earlier, as I started reading through this and we were talking about things as leases that weren't actually leases anymore, it starts getting confusing. So to actually acknowledge that somehow at this point might help.
Thanks, Todd. Point well made.
Not seeing any other comments, so let's move on to page 4, which is table of contents. Obviously will change based on what we just discussed about ordering. Page 5 is the start of the proposed guidance.
I think we should just have a standing item, Todd. So Todd first and then Lindy.
I've got quite a lot of comments on this.
So I'll just go to Todd first.
Which are related, I think, to some
Sorry,
of my
Todd,
earlier
I shouldn't
comments.
Go ahead.
The objective paragraph, I don't think quite works, because the amendments to IPSAS 23 aren't just about concessionary leases. So I think we need to finesse the objective of what we are doing here, because I think a consequence of having the concessionary leases is we have to deal with these other concessionary things that aren't leases, like the zero and nominal consideration. So there's something that needs to happen to that objective paragraph.
So possibly actually if we flip it round in terms of we're trying to provide accounting guidance on you know, concessionary leases, other concessionary arrangements by amending IPSAS 43 and other consequential amendments, something of that nature. Okay. Lindy. Sorry.
I'm on the next page.
Oh, okay.
So if no other comments on that page, let's go to page 6.
Claudia. Go ahead.
Thank you. Even we have already discussed it in the past, we expect to agree on the revenue standard in December. And then we decide afterwards if we would re-exposure them. We have amendments to IPSAS 23, which didn't exist any longer. How do we expect to deal this?
Ross.
Thanks. So we will have an implementation period. So IPSAS 23 will not disappear as soon as we approve a new revenue standard. So regardless, we will need to update IPSAS 23. There might be further consequentials we have to make to the revenue standard, the new revenue guidance once that's complete, but first we do have to complete it. So we've logged this issue. We are aware of it. We've had discussions on the staff side, but the appropriate amendments at this time are in the ED, amending the actual revenue guidance we have. And we flagged it, and we've been talking with the revenue transfer expenses team to pick up any related consequentials that will need to be made to those standards once they're finalized.
So I think that, but I think we go back to the comment that was made earlier, which is we need something, and you know, it needs to be quite upfront, which I think is Claudia's point, that at least if that's the route that we're going, that we make it clear that it's not that we're doing something rather strange here. It's that actually that's what we're doing, and we will come back at, you know we need to come, you know, we need a sort of statement that without committing, but at least acknowledges it. Ross.
Yeah, I think we can come up with that communication point. What I want to make sure we're not doing is what we did a couple of EDs ago, where we're proposing amendments to a final standard for an ED that's not final, because we got a lot of really negative feedback from constituents on that, and that is the wrong approach. So what we're doing this time is right, not proposing amendments to guidance that doesn't exist yet. We'll log it, we'll communicate it, we'll bring something back on this, but let's not start trying to solve problems in the meeting and creating problems.
I think we know what we're trying to do. Okay, so Lindy, you're on the next page. Okay.
Touch the mic, sorry. The first one is just a typo, 28A. We need right of use asset in kind, just in that row, yeah. And then at 43, we can't be deleting that paragraph 43 of, because you can acquire those assets in a non-exchange arrangement and record it at fair value, and it might not be a lease. So I don't understand why 43 is proposed to be deleted in here.
It is deleted, might be now awkward because we did not discuss the agenda item related to the measurement. So, but just kind of giving a hint. And also to explain, so what it is in gray, shaded gray, is what we have, the version as we brought to the board at the June meeting, everything that it is in shaded gray. At that time, we were proposing to measure the right of use asset in a concessionary lease at fair value. And that's why we have the 43A when we added right of use assets held by LSE. But now, after that, during the lease this quarter, the staff and the task force is proposing not to measure at fair value, but propose to measure at the present value of market lease payments.
Can we not go into the detail on this? I think the point that I wanted to make was actually, I think you've raised it, Lindy, but I think measurement, we need to get further and make sure that the board actually has been able to work through fully the discussion that we had the other day. And then once we're content that we understand what's going on with current operational value and fair value in measurement, then we can reflect it into here. And that was why I made the request that we didn't discuss measurement here, because I think we need to have really got ourselves landed. So I think we know we need to amend that paragraph, but or we might not, but we just need to come back to that. So I don't want to get into the detail at this point in time for that reason. So Todd, to you, and then to Liang after that.
Thanks, Ian. I'm on paragraph 28A, and it might be something that's needed in the drafting, but I think concessionary leases are dealt with in IPSASB 43. Right of use in-kind assets are not, because they are not leases. And the way that I read that, it suggests that right of use in-kind assets are linked to 43. They only get linked there because the accounting, when you get to those assets, which should be dealt with all in 23, needs to refer to 43. So I think we need to be careful with the way that we associate the right of use in-kind assets with 43, and it doesn't quite work for me at 28A.
Thanks, Todd. I mean, I think that shows you exactly why we need to be absolutely crystal clear about what's in scope for 43 and as an amendment to that, and what is guidance elsewhere or signposting or whatever. Liang, to you.
I see paragraph 8.3, the sentence in rate. Actually, it is also discuss about the initial recognition of the asset. So should we put it together with the paragraph 43A? Yeah. Thank you.
Yep. Thanks, Liang. Okay, ready to move on to the next page?
So now we're moving on to page 7.
Liang, are you in on this one? Or okay, Todd.
I had a question on paragraph 96, and we've added in there a lease contract to receive the right of use assets. And I'm just wondering why we've added that in, because it appears to be under the heading of gifts and donations and goods in kind.
Basically,
we're talking about a lease, so there has to be some consideration if there's a lease. Might not be market consideration, but there's some consideration. So it's not just a gift or a donation. So I struggled to understand why it was there.
Yeah, so this will be part of the cleaning work that staff will be doing upon the request of the board, that we have the discussion about the terminology and where it is a lease, where it is a concessionary arrangement. So we'll be doing that cleaning, and perhaps even here that part will be removed, just to focus on right of use assets in kind and not anything else. But we'll do that analysis throughout. Thank you, Todd.
Todd, back on that.
Back on that, I'm happy with that. There was another matter on the same page, sorry. And that is in paragraph 105C. In the second line, we say, if any, in relation to a lease, a payment. If it's a lease, there has to be some, so if any should be deleted.
Thanks, Todd. No other flags up, so we can move on to the next page.
So next page is page 8.
Patricia.
Patricia.
I would like to confirm if the measurement basis you be deleted here or you substitute, because I think for clarity, it's better to retain the measure base after we decide about this.
Sure. Yeah, I mean, I think it is the same issue, so we need to come back to that when we're clearer on where we're going on measurement. Okay.
Page 8. Page 9.
Mari.
Yes, thank you. I mentioned before the identifying a lease section. assessing whether the transaction, that word transaction is used. Transaction is at market terms or at below market terms. And 80AA mentioned about the determination of whether the transaction is at market terms or at below market terms. It not refers to the lease. So it is something confusing for me. Thank you.
Thanks, Mari. So we need to specifically address that in the cleanup exercise. Thanks.
Page 10.
Mari, you still on this page 10?
In addition, and so the 18B mentioned about the second sentence is I'm very confusing about it. So the consistent logically explanation is necessary, I think. Thank you.
Okay, thanks. Todd, and then Adrian.
18B, the last 2 or 3 lines give an example which isn't actually a lease. So I think it needs to come out, or we need to find some other example, because it talks about zero consideration.
Thanks. I think this demonstrates quite how difficult this is to draft, and but now we've got the clear instructions from the board. I think that will help staff and task force then in terms of getting the clarity we're looking for. Over, Adrian, to you.
I think we already had discussions on the subject, but I believe that low value is not appropriate, would be immaterial, as really depends on the entity, of course. Low value has no straightforward definition in our standards.
Ross.
Yeah, I mean, we did have this debate when we did IPSASB 43. That terminology, Joel, can correct me if I'm wrong, but that comes directly from IFRS 16. And we put the nuance in the basis for conclusions to kind of capture the point on materiality, but I think we're.
Sure.
Thanks, Hervé. Yeah, we can do much because this is terminology that comes from the ISB, and we didn't find any public sector specific reason to modify. What we can do is perhaps explain a little bit further what we mean by that, if that answers your concern. Thank you.
I think the question is, if it ain't broke, don't fix it at the moment, actually. Okay, so I think we're ready to move on.
So 10. Page 11.
Wow.
So there are several references to the measurement, just to kind of anticipate. Staff will bring that later on together with the other reference. So everything that is related to measurement, please, it is already on our pocket to address. Thank you.
Page 12.
Todd.
Sorry. And both paragraph 71A and 81A, we make reference to in the absence of lease payments, which I don't think we need because there will be some sort of payments for it to be a lease. And in 81A, I think the last sentence should be deleted entirely.
Thanks, Todd. No other comments?
Page 13. Page 14.
Todd.
I think AGs 62 and 63 will now need to be deleted as a result of what we've been discussing.
Okay. Patricia.
I mentioned the diagram need to be, yeah, okay.
Okay.
Page 15.
Trisha, are you still in or? Okay.
Page 16. Todd?
I haven't been all the way through the BCs because I thought there'd be a whole heap of consequentials as a result of what I've raised already. But I did just pause on BC 107 where it said at the end, IPSAS 43 is not applicable. We were talking about the right of use assets in kind, but because we do bring them back to 43, it didn't feel completely honest to say it's not applicable. So it's something that perhaps can be picked up in terms of drafting. But I promise after saying that, I won't say anything more on BCs.
No, I mean, it's fair comment. Obviously, there will be consequentials from the discussions we've had, but agree with you on that one. Okay. Oh, Trisha, sorry.
No problem. Can I come back in page 15?
Yep.
Yeah. In the paragraph AG 64, it's mentioned the combination of a lease transaction and a grant. I think it's not the case. It's not a combination of a lease transaction and a grant. The concessionary lease is a lease that part is paid and part not. Yes, thank you.
Thanks. Good point. And also, I guess, you know, we're not using the term grant per se. I mean, we're using transfer expense and so on. So we just need to have a, you know, review that accordingly as necessary. Thanks.
So that takes us to page 17. Page 18. Page 19.
Over, Adrian.
Of course, in connection with my previous comment, BC 126A, I would avoid the phrasing and asset is of low value are not material enough. There is no bijective relationship between being of low value and material. So for which I think is of low value and immaterial.
Yeah. And on this one, it's RBC, so we can word it as we want. Okay, thanks for that.
That takes us to page 20.
Are you still in over, Adrian? Okay. So I think we're fine on that.
Page 21. Page 22.
Yeah, sure.
Yeah. After paragraph BC 147, so as I said earlier, these paragraphs are individual paragraphs, but all these sections on RFI will be revised according to the instructions that the board gave earlier. So it is only for illustrative purpose for the board to see how those instructions will be here, but they will be completely redrafted according to what we received from Todd. Thanks for that.
Okay, thanks. And other members are allowed to contribute as well, doesn't start. But I'm taking the mickey. I mean, we do appreciate the work that's gone into the review. So if you can pass that back to the staff, that would. Okay.
So I think that takes us to page 23. Page 24. And 26, that's it.
Great. Okay. Well, I think that's been a really helpful item, actually. So thank you once again, both to Joao, but also to the task force for all the effort you put in. I think it really has moved us forward on this. You know, I mean, obviously we've given direction, and that will shape what we see coming back next time. But I think in terms of the substantive issues, I think, you know, we can echo Lynn's comment that I think we've had good debate on those. I think we're in good shape in terms of the direction we've given. I think now we need to focus really on how do we actually communicate the various different messages and between our various different bits of guidance and the areas that we don't have guidance at the moment that might fall into future possible work plan projects. So I think that's really, you know, when we see this back, I think the ask would be that we kind of see at least a draft of that package so that we can actually see, you know, how it's all going to hang together. So apologies for asking staff and task force for more work there, but I think, you know, it's important from a point of view of making sure our constituents can see that we've, you know, received, understood and actioned where we can what they've said to us. So thanks everyone for that. Lynn, I don't know whether there's anything else you want to add as task force chair on that. Good. Okay, well, thanks everyone. So as advertised before lunch, we will now move into the session that we originally had on Friday morning, or scheduled for Friday morning, which is on differential reporting. And I will welcome Joe to the meeting table, and Ross, perhaps over to you before Joe actually starts.
Yeah, so welcome, Joe. It's Joe's first time back in person since March 2020. So Joe made the trip here from Australia today. And Joe's going to take us through agenda item 11. It's summarizing the research she's been working on related to the differential reporting project. And just to remind you on this, that we committed to adding a number of projects. And a couple of years ago, when we took on new projects, we decided to start with research and scoping activities to try and make sure we fully understand the issues in a broad sense before we go into drafting a project brief. So this is the first kickoff of those activities and the research Joe's started to do related to different differential reporting models that are already established at national level. So with that, Joe, over to you.
Thanks, Ross. Yeah, so as the papers indicate, we just really want to get the discussion going on this project. How do I work this thing? Right. Oh, yes. So the background of the project is, and you'll see it's been raised as a potential project to go onto the work program in 4 consultation documents. Initially, there wasn't a lot of support for the project, but I think now with the accountability index indicating that accrual accounting, especially in the public sector, will be increasing quite exponentially, that it's quite a key project because there's a lot of jurisdictions that may not have the resources or the capacity to do full IPSAS, or some of their smaller entities may not have that capacity. So it's quite key that you know, it's an issue that's been addressed in the private sector. So it is obviously something that should be addressed in the public sector as well. So the last 2 consultations did get support from constituents that it's time that we actually start looking at doing a differential reporting project. So we have actually developed a draft project brief, which will come back to a later meeting. But before we want to bring that to the board, we wanted to raise 2 major issues that have been identified in that project brief. Actually, I've sort of come up with like 13 issues that will need to be addressed in this project, but these are the 2 major issues. And first of all, what is differential reporting? What type of differential reporting do we want the board to develop a standard on? So we've said we want to do a project on differential reporting, but it's never been defined. Nobody's ever discussed what it's actually going to look like. So I've done some initial research, and I do apologise for it being Anglo-centric,
but it's the only language I speak. But it did actually show that there's diversity in practice. So obviously everyone's aware that the ISB has IFRS for SMEs, which is for smaller entities, private sector entities that do not have public accountability. So they have taken an approach of simplified recognition and measurement, plus also simplified disclosures. So then you go to a different jurisdiction, and Australia has taken the approach of just reduced disclosures. And that's actually, they had an RDR approach for many years, and they've actually now just revised that, but it is still only reduced disclosures. They are looking to do a third tier in the near future, but at the moment, they're just looking at the relief given is just on disclosures. New Zealand takes a different approach again. So their tier 1 private sector will have reduced disclosures, but then when they get down to their lower tiers, especially in the public sector and for their PBEs, their not-for-profit PBEs, then they have reduced disclosures, but they also have reduced recognition and measurement as well. And in the UK, in the public sector does full IFRS, but in the private sector, tier 2 companies, which are not, it's sort of governed by the Companies Act. Ian probably knows more about that than I do. I actually find it quite confusing the way it's done, but which entities can apply. So listed companies in the UK have to apply IFRS. Unlisted companies, regardless of the size, can apply tier 2, and they also have a lower tier for micro entities. The tier 2 in the UK is based on IFRS for SMEs, but it has been adjusted quite significantly for different recognition and measurement that is not allowed in IFRS for SMEs. And then the micro entities is really quite simplified accounting. I did an email blast to some board members about what happened in their jurisdiction, and I do apologise to Ajith. I see him on the screen there. I missed out Sri Lanka. Sri Lanka does have quite extensive differential reporting, but I did put a table in the back of agenda item 11.2.2, which shows the different types of differential reporting that is global. So just going to open it up to the board about what do you think differential reporting should be for the public sector and for IPSASB specifically?
Thanks, Jo. That's a good introduction to the sorts of challenges. Thomas, to you first, and then to Scott.
Yes, this board is always looking what the sisters and brothers in the IPSASB project are doing. I just wanted to kind of remind that there is already a piece of paper regarding relief for less and small and less risky entities. And there was a huge discussion at the IPSASB working group. It was a meeting in Paris where we intensively discussed that. So you might benefit from that as well.
Thanks, Thomas. Yes. It's a few years back now, I think, but it's still relevant. No, yeah, matured, like all of us. Scott.
Yeah, Joe, I won't take it personally. You didn't send me the email, but from a U.S. perspective, I did want to share, there is some things going on in the U.S. I think it's a whole different model, so it could really confuse the discussion. But you know that FASB went a different route. They have the private company council, and the private company council gives the FASB board advice about should standards be adjusted could be measurement, recognition, or disclosure. And so they don't issue different standards. They go into their standards and modify their standard for parts that could be different. I said this was going to complicate it. So, but that was really because FASB's FAF was very violently opposed to having a separate set of standards. They had a blue ribbon panel that recommended that. FASB decided they didn't want to go that route. And this was I would say, a political compromise to be able to do that. So that's another one that's out there. The AICPA, which doesn't normally set standards, actually has created their own separate basis of accounting for private companies. And it's a combination of cash and tax purposes for small companies. So they actually issued a total standalone set of standards. So I just wanted to add two more to your list on that.
No, thanks, Scott. I mean, I think that's very much the purpose of this research stage, is that, you know, we go out and capture all the available experience that we can before we start to think about what the scope of the project is, let alone what might go into the consultation paper, or, you know, and I think it will, you know, without getting ahead, I think it's likely to be a consultation paper on this project because it's the first time for us. So inevitably we will need to, you know, go that route, although that is magic for the matter for the project brief. Okay, now I think maybe I might go to Ajith and then to Lindy and to Todd and then Adrienne. So Ajith, fingers crossed.
Thanks, Ian. Actually, Sri Lanka has done a considerable amount of work in
Sorry,
relation
Ajith,
to.
we're still having problems. I don't know if it's still the settings for you.
I think we did a test with Leah. Is it working? Can you hear in the meeting room?
Good.
Can you hear?
Go ahead.
All right. Okay. Thanks, Ian. I think Sri Lanka has done a considerable amount of work in relation to differential reporting. We actually started off with private sector, and then we subsequently moved to the public sector as well in relation to differential reporting. One of the key problems we found in relation to international standards, both IFRS as well as IPSASB for smaller entities, is that the complexities relating to fair valuation, discounted cash flows, and actuarial valuations were difficult to be applied, particularly for local authorities in the public sector and private sector small entities. Even the IFRS for SMEs was not suitable for small entities because of the complexities involved, where adequate expertise is not either available or is too expensive, and therefore using that is not cost effective from the point of view of smaller entities as well as local authorities. So what we did was we looked at accounting that prevailed in the 1970s before the complex standards came into being, where fair presentation was a requirement, but we didn't have the principles of discounted cash flows or actuarial valuations, or we used more simplified techniques in order to achieve fair presentation. So with that view, we looked at the accounting that prevailed, not only in Sri Lanka, but all over the world in the 1970s, where these complex techniques were not there, but we had fair presentation financial statements. So based on those principles, we developed a standard, initially a standard for small entities, and then subsequently a standard for local authorities. So I think that might be an approach to use, because if we start by looking at the IPSAS standards, current IPSAS standards and IFRS standards, we are starting from a very complex base and then trying to get into a simple base. But if you look at what we did before that, before the complexities came in, I think it might be easier way to identify what was the accounting that was done at that time, and based on fair presentation, to use actuarial accounting. So that might be a good way to look at it in relation to developing a standard for smaller local authorities and small entities. Thank you.
Thanks, Ajith. I'm glad we managed to get you in eventually. Okay, so let's carry on in terms of collecting examples and experience from members. So I've got Lindy, Todd, Adrienne, Nima, and then Abdullah.
In our jurisdiction, we tried to convince ourselves to do it and we failed 3 times. So don't have any experiences other than the fact that we have cash accounting, which is differential reporting. I agree that I think we probably would have to consider simplified recognition and measurement and disclosures, or both. So I think that approach is probably where we would go. I think what I hear you also saying, because my first question was, this is not an IFRS alignment. And I would hope not, because we would have to consider the public sector. And linked to that, I think it is going to be quite difficult to scope it and to identify the reporting entity. So you'll remember when we as a board tried to define GBEs and the pains where it was really difficult to define a reporting entity, and we landed up rather focusing on what IPSAS reporters are. So I think, yeah, I'm not wanting to go too far on this, but I do think it is going to be quite difficult. It might be jurisdictional, and then rather take an approach of looking at a user rather than looking at different tiers or defining an entity. So I do think we need to think about different ways of how we would get to that, and it might not be what other jurisdictions have currently done. Thank you.
Thanks, Lindy. Ross, you wanted to come in before I go to Todd?
Yeah, I did, because I think Lindy touched on a lot of things we've been thinking about on the staff side. Good points. And I think this is an interesting project that starts with a lot more problems and a lot of not easy solutions. I think in most projects we undertake as an international board, we're probably an advantage to national standard setters that we can focus on the concepts at a high level and not their application. But I think when you talk differential reporting models, it's much easier for national jurisdictions to set their bright lines and simply just draw a line on what's big, what's small based on size of the entity or complexity, because they know the boundary of their jurisdiction and their own entities. But we're going to have to do this in a principled manner. And I think we're clear on what entities IPSAs are designed for now after the project a few years ago, where we've clarified that in the preface. But the principled approach to coming up with, what's small and medium or less complex in the public sector is a tough nut to crack. And our IFAC related board on audit has been working on their audits of less complex entities for a number of years. They've just gone through an exposure draft, and some of the feedback they got was actually around the public sector and how you deal with what's less complex. And that's one of the issues they're thinking about. So we are going to learn from them a little bit. We're going to work on that. Ian said he thinks this is going to require a consultation paper. I think we're completely convinced it's going to require a consultation paper. We haven't decided yet what the different options might be on that, but I think that's the challenge for the board, is articulating what principled models for a different reporting model for less complex, smaller entities would be in the public sector. And there are different things we could look to. So I wouldn't rule out looking to IFRS for SMEs for ideas, but I agree you'd have to adapt those for the public sector. So that might be one model. And there might be other national models that we could use or build off of on that, but that's the real question we have to answer.
Thanks, Ross. Yeah, and I mean, I think it's already coming out. Do you go top down, bottom up? Do you split by tiers? Who does it apply to? Can it apply? All of those kinds of questions are going to have to get covered. Okay, so to Todd next, and then the Adrian, Nima, Abdullah, and Chris after that.
Thanks, Ian. And I just wanted to make a few observations. I think this is going to be quite a difficult project for this board. Just thinking back on the New Zealand experience, it could be quite difficult at a single jurisdiction level, and we're going to be trying to come up with something internationally. In terms of observations, I definitely wouldn't go for just a reduced disclosure approach here. We might want to float that in the consultation paper, but I don't think it's going to actually hit the mark if we do that. And that's based a bit on New Zealand experience. There was still a lot of small entities that said, I don't want to read the thousands of pages. I haven't got the time to. I'm too small. So I think, if we're thinking about this is for some of the smaller public entities. They would need to be able to engage with and apply something reasonably simple compared to the thousands of pages of standards. So I think we are going to be looking at something that is standalone personally. So agree, it's not necessarily an IFRS for SMEs, but I think we will look to those sorts of things to get our ideas for what we want to do here. And I'd be surprised if we go out with a consultation paper and get feedback, but no, we just want reduced disclosures or something different to a much tighter standard. Just reflecting on the New Zealand experience, there was quite a lot of work that was done in New Zealand to get a sense of those smaller organizations, what are the sorts of transactions that they have so that we can address, it's the 80-20 rule. If you've got the 80% of transactions, then, most of the entities are going to just be able to read that and apply it. But that was quite a big exercise within our jurisdiction. We need to sort of do that more internationally, I think, to do this properly. But there's just a few observations from me.
Thanks, Todd. I think that's really helpful. I think, that's where we as a board can really, when we pull all of this experience together collectively, I think that will show the value of this board, notwithstanding, as you say, the complexity of some of the issues and the challenge of doing it internationally. Over to Adrienne, then next, please.
Thank you. I will not comment on the French experience because I have absolutely no idea of any attempt in this country to think about or to issue differential reporting standards. But what I want to add to the comments with which I fully concur is that differential reporting is more or less the same question that is put by my previous comments on being low value or being material. It's not a matter of being small or less complex. It's a matter of how can we address in some entities the requirements of the conceptual framework, qualitative characteristics, namely, and how can we address the underlying principle that reporting must in every instance be carried out under a cost-benefit principle. And we've already commented on that, cost-benefit. Now, we can't compromise, I would say that we can't compromise on the qualitative characteristics of the financial statements. We wouldn't be reasonable if we would compromise with the cost-benefit, because of course, the question comes from consideration of the fact that you can't require from a smaller or less complex entity with less accountants or preparers, usually proportionate to the complexity of the entity, to provide the same information to users than what we require from larger entities with a large human resource capacity for preparing financial statements. So indeed, it's going to be a very difficult project. It's very good that we can observe what's going on in some jurisdictions, but maybe it will not be possible in every case, in every under every items that we have to address to transpose what is done, because smaller or less complex public entities might not be exactly the same as small businesses in the private sector. So we first have to think of what is a smaller or less complex, or what is the requisite for issuing differential reporting standards for some specific entities in the public sector, and then decide, okay, how can we address our wish not to compromise on the qualitative characteristics of the financial statements. There might be, ways to do it. Could be simplified recognition or and simplified measurement, could be reduced disclosures. I believe that it's probably both. It's probably both. And those who have, gone for one or the other might be wrong, because in doing so, they might not meet the criteria that are set by the conceptual framework, which I believe are really the basis of financial reporting, which we can't compromise on.
Thanks, Adrian. So if I go to Nima next, and then Abdullah, and then Chris.
Thank you, Ian. In Tanzania, actually, we use like both. We have the IFRS, we use IFRS for SME, the IPSAS, but we had challenges with small entities, especially in the private sector. So the board issued the financial reporting for micro entities, which is for small entities. And really, in their definition of small entities, they looked at the size of the entity in terms of the assets, turnover, and the average number of employees. And we had a question from the public sector as to whether the small ones, the small LGAs, they wanted to use the reporting for micro entities. And the board was on the position that as long as it is a public interest entity, which they are because they're in the public sector, they should not use the micro entity standard. And actually they went further to say that even the NGOs, because they are receiving donor funds or funds from the government, they will all be regarded as public interest entity, and as a result will not be allowed to use the reporting standard for micro entity. So really we'll be interested to see how this one comes out, may change the position of the board.
Thanks, Nima. You put your finger on a very difficult issue that we're going to have to face. Abdullah, and then Chris.
Okay, thanks, Ian. And I should have placed my flag earlier because most of the comments that I wanted to raise been covered. I agree with Lindy. It's not an alignment with IFRS, but we might reach out to see if the methodology they talk with in the public sector is going to be really tricky, because when you go to the conceptual framework, you are saying one of the criteria for public sector is like to provide services for the public. So if you say in SMEs, just part of it is like limited stakeholders that are going to be looking into the financials. No, this is a different game mechanism in there. The other thing is the reporting entity, and we are facing issues now with coming up with a reporting entity. And now we are going to say that differential reporting, it's going to be a tricky game. It's going to be interesting. I don't want to say it's going to be tricky. And I agree with having a consulting paper, but being careful with the SMEs and the PFs, like where do we put them, what kind of questions we throw in there. And the last thing that I also had my experience with the private sector, and we applied IFRS for SMEs, and it was a getaway for some of the entities to not do the whole reporting, so they would adopt SME, the IFRS for SMEs, and that's pretty much. Yeah, these are the comments, because I didn't want to step on some of the comments that was raised by some of the other board members. Thank you.
Thanks, Abdullah. So I'll go to Chris next.
Thank you, Ian. I appreciate from the onset that this is going to be a very difficult project. And let me also add to the problems. I am asking for how do we situate differential reporting in the context of a federal structure, where you have the federal government, the national government, the state, the subnational, and the local government, what we call the subnational government. And how do you deal with the issue of consolidation with national government? And even consolidation with this subnational government, how do we help the subnational government to prepare their financial statement, what framework would be provided for them to take this on board? I listened to what Nima said about public interest entities. In my jurisdiction, the regulator brings together every entity that makes a return to other regulators to be regarded as public interest organizations. So I'm hoping that this project will kind of clear the way, give us guidance on how to actually deal with such categorizations.
Thanks, Chris. I mean, I know this is probably where Ross will be talking to colleagues within IFAC who've also been addressing this issue about public interest entities, and it has proved quite thorny. Let's leave it at that for the moment. But I think, and you also raise a good point about the challenges around, if it's right as an accountability for an individual body, how does that sit with consolidation? So a number of challenges there. So I know that Claudia had her flag up next, but I'm actually going to come back to Claudia last, because sort of in terms of, we know we're going to need a task force for this, and very nobly, with a caveat that she needs to finish off on leases first, she has agreed to lead the task force. So I think probably fairest if I take the other comments, Claudia, and then I'll come back to you to have the final word on that. But thank you in advance if you're still up for it after hearing the comments from all your colleagues around the board table. Okay, so I think probably next was Lynn, and then Lucy, and then David.
So I thought I'd share a bit of experience, but then also some observations. So there was a point in time in the UK when we thought that differential reporting might be useful in the public sector. We did a paper, particularly in our local government sector. We did that paper that explored options because we got a lot of feedback that the financial statements of local government entities were really long and really complex and nobody understood them, and therefore they should be simplified. We never ended up doing so. We found the project really difficult in practice. We thought it was going to be really easy by saying this particular type of local government entity must be less complex, therefore we can make the requirements easier. But we came back with arguments around every local government entity, the public are interested in them, and therefore what you're ending up compromising becomes difficult in practice. So we set out thinking we were going to help, and actually we ended up enhancing guidance around materiality so that people could use materiality arguments as to when could a simplified approach in the detailed measurement of something result in something that wasn't materially wrong, and that was good enough. So it was a much more practical endpoint we ended up at rather than a big suite of guidance. So I guess that was the first bit of experience I wanted to share. But reflecting on that, I think one of the challenges for this project is being really clear on what is the objective we are trying to achieve. The paper talks about we think more entities will move to IPSAS, and there could be a cost burden associated with that. So is it we're trying to achieve more entities applying IPSAS, or is it that we're trying to get them to reduce the cost so that more entities will apply? And I think with that comes, and will the end result be useful, which I think is Adrienne's point around what is it we're not prepared to compromise. What we don't want to do is compromise so much and simplify so much that the end result doesn't end up meeting the right characteristics for those types of entities. So I think we do need to be clear on objectives. Two further just smaller points, which I think it was Todd that talked about this, or 80-20 rule in terms of the types of transactions. And I guess sharing experience, the Jersey Audit Office adopt IPSAS. We are a very simple entity and we don't have a long set of financial statements because we don't have the type of transactions. So how much of it is solved by the types of transactions? And is it actually some guidance to help people navigate the common transactions might be the output rather than a standard? So being clear what we think on that is useful. And I guess the final point that I wanted to make is being clear on the tests that we will have in our mind that we will apply. So if we're going to give a relief on recognition and measurement or on disclosures, and I think we should be open to all of it, and what's the test that we will apply in deciding, are we going to do that or not? Why is it a better result if we do? How will we assess public interest? How will we assess that the end result is good enough? In the knowledge that whatever relief you give, entities are unlikely to go beyond the minimum requirements. So you are setting a new standard there, and probably if we accept it for the smaller entities, we ought to challenge ourselves on the larger entities as well.
Thanks, Lynn. So go to Lucy next, and then David.
Thank you, Chair. I just want to share that in our jurisdiction, in case of local government units, we have around 43,000 plus barangays. That is the smallest unit of local government. Local government. And so when we implemented IPSAS in 2014, we found it really very difficult for these barangays to comply with the accrual basis, with all the required reports and disclosures. So what we did was we prepared a manual that would guide the barangays on their financial reporting, because the other problem is that organizationally they are not ready to implement accrual basis because they do not have accountants. The accounting and financial reporting is done for them by the city accountants or municipal accountants having jurisdiction over them. But when we prescribe the manual, we tried as much as possible to be compliant with the accrual basis, but we were forced to simplify the reporting requirements, and even we gave some relief on the disclosure just so that their accounts would be consolidated, because we are preparing consolidated report for local governments. So that was the step that we did, and of course capacitating them is another challenge. How they could implement the manual that we did. We have complete set of the six financial reports that we required of other organizations, but in the implementation, there was really challenge in complying with the simplified reporting requirements. And so I was one of those, even when I was not yet member of the board, I was one of those who really advocated for a standard on differential reporting, because this is really very applicable to us. Now, there is another set of organizations under each barangay. There is a youth organization, we call it Sangguniang Kabataan. This is organization of youth, and when we and they are autonomous from the barangay, so they just receive some percent, around 10% of the funds of the barangays, and this is given to the Sangguniang Kabataan. And organizationally, they are not really ready to implement accrual basis. So we were forced to implement CAS basis, IPSAS CAS basis. And we are now in the process, we have started implementing this in 2019. And before I retired from the service, because I was the one spearheading this project, I said that maybe after 3 years from the implementation of the handbook that we prepared for the SKs, maybe we and then there would be additional legislations that would provide a staffing pattern for this SKs, so they could have their accountant or bookkeeper at least. So maybe we can transition if we have this differential reporting, we can transition from cash to accrual differential reporting somehow, if this would be approved. So this is really very important to us, because we find problems in the consolidation because of the different reports that we required of these barangays and these SKs. They cannot really be included in the consolidated report for local governments. So this is really very important. That's why I gave this to Joe. But in the case of the private sector, they are now implementing the IFRS for SMEs. And we don't, now there is an additional, it's not only SMEs, but MSME, micro, small, medium enterprises. So we don't know whether the IFRS for SMEs would also be applicable to micro enterprises. So that's it.
Thanks, Lucy. I thought that point about using the cash basis IPSAS for the smallest is actually a very interesting thought. So that's certainly something that hadn't really kind of crossed my mind, I must admit. So thanks for that. David, to you. And then I will actually go to Baudouin, which is why Baudouin is sort of, it's not that he's joined the staff, at least not to my knowledge anyway, but there was he had his flag up and just wanted to bring in something. So David.
Thank you. Really, I suppose I wanted to pick up on a few points that have been made, but also sort of picking up first on Lynn's point about the consultation you did for the local government. I remember when I was secretary, was I even secretary at that time, to the Financial Reporting Advisory Board, and the question came up as to whether or not we should do some sort of differential reporting for some of the smaller central government bodies that would be covered by at that stage UK accounting standards, and it was a firm no because of the public interest perspective, and that all public sector organisations are of interest to the public. So I think when poor old Claudia is leading this task force, you made the wrong choice there. I think you need to consider the public interest. You need to consider decision usefulness. You didn't need to consider accountability. If you ask the preparers of financial statements, they will always want something simpler. Always. If it's easy, we'll do it. If it's harder, we don't want to. But so you have to balance that, I think, with the needs of users. And I think there will be a balance. I think it's going to be extremely difficult to come up with anything that is totally principled. So I've got a feeling that this project will even outsee me as a technical advisor on the board. I think we need to be careful picking up on some of the points that Lucy's made, and also perhaps some of the points that have been raised in the academic paper on IPSAS 33. We need to divorce capacitation issues from complexity of reporting. We know that there are capacitation issues in various jurisdictions, but that should not influence the quality of our standards. And picking up on the points that Adrienne made, we need to be faithful to our conceptual framework. Personally, I'm not sure how far we will get with this project. I think, as I say, I think it's very difficult. I mean, it could be that we get to the stage where we decide to go somewhere different. And you know, some of the points that Lynn made about actually in the end you came up with preparing extra guidance on something to help in the implementation of standards may be an approach that we shouldn't ignore. But Claudia, I wish you the best of luck. Thank you.
Thanks, David. So I'm mindful of time, and also mindful of the fact that I've kept Claudia waiting to come in. So I've got 3 more interventions to take. So if you can, the 3 that come before Claudia, if you can just add incrementally, there's loads of experience, and I think that's actually what's really come out from this discussion, that as a board, we've got a huge amount of experience to bring to bear on the difficult issues that we face. But I'll take Baudouin quickly, then Mike, then Patricia, and then I will go to Claudia at that point for the final word.
Okay, thanks, Chair. Just wanted to share my own experience as the auditor of one of the smallest, but the oldest international organization that is located in France, and with total revenue less than 10 million euro. So it's a very small organization, but it's an organization that went from cash accounting to accruals, and directly from cash to IPSAS accrual. First, clearly there were a complete lack of resource from their side. There is still 10 years thereafter. The governance of the international body, which I would imagine would be one of the issues that we will encounter on any type of entities. The governance is attached to the quality, to the fact that this organization is applying full IPSAS. The ones that comply are the guys that prepare. Because of their lack of resource, the way they overcome the issue was to externalize. And they are using an external auditor. So I'm not saying this is the way to get through, but what I'm saying is that that's the way they manage it. The second experience that we have in France is that there is a current experimentation for municipalities to apply the French local public service standards, regardless of their size. That comes from micro, like 2,000 inhabitants type of municipality to Paris. So a wide range of size of entities, and I'll be more than happy to share that with Claudia. Down the road, if I want to make it short, I understand I need to make it short. My own experience, I've been the auditor for the last 10 years of that entity, is that they need full quality as the IPSAS same quality. They need training. Training would be essential, and I believe that what they really miss is some kind of guidelines that would compile all the essentials element that are facing, because as you can imagine, some of them, but not that many, face financial instruments issues or very complex issues. Pretty much it's very simple. So I don't know if that helps, but I'll be more than happy to be helping Claudia if I can.
Thank you, Baudouin. So Mike, to you briefly, and then to Patricia before I go to Claudia.
So very briefly, I'm very much in favor for doing that project within the board, but however, I don't have
a perfect solution for that. But nevertheless, our audit experience is the way I would like to echo what Lucy just told us. We have, of course, larger organization. We have also organizations which are really small, as they might have staff number of 1 or 2 which are preparing the financial statements. And even if you think a little bit the way the board moves to sustainability reporting or already the RPGs, so it's good, let's say, that we reflect those, let's say, small entities in our approach. Thank you.
Thanks, Mike. Patricia.
Thank you. And this project is so relevant for Brazil because of the high number of municipalities that have, and the municipalities in Brazil have political autonomy. I think it's a different point that it make the question more challenging in Brazil. But considering the objective of this project, I think one of the objectives is increase the implementation, because when I analyze the process in Brazil, small entities have more difficult to implement, to access the standard, to understand the standard. Yeah, there are some factors that impact on the implementation, but the complexity is one. The complex of the standard is one of these, and the clarity too. And sometimes I ask a lot, and clarity, and it's need to be clarity because it's in fact impacts on the implementation too. But my initial view is if the decision is only to reduce to the disclosure requirements, the cost benefits, in my view, it's worse, because the most part of the cost, the difficult the cost, you'll be retained, but not in, and I reduce the benefit to the publication of the information. And I think in my initial view, it's necessary to reduce the recognition and requirement, recognition measurement requirement too, especially measurement. Yes, thank you.
Thank you, Patricia. So, Claudia, you've been very patient. And I'm not going to ask you to summarize what you've heard.
Oh,
but,
God.
It's also probably appropriate because one of the early proponents of through the various different fora that we've had was the chair of the Swiss Standards Board, and who's very passionate about IPSAS light, as he called it. So I think, I'm not sure whether Niels will be here next week or not, but anyway, Claudia, to you.
I thought he's one of the presenter next week. I'm
You
sorry.
may, I think you're right, actually. Yes, entirely for that reason. Yeah.
So I hope he will at the board, at the Standard Setter Forum, participate. At the beginning, I would just give some personal views on it. After hearing a lot of the experience, I can more or less follow one of the Todd's experience. What we have in Switzerland for the public and the private sector, we decided for the private sector, for example, they have their own standards. Only public quoted companies are required to use IFRS, and the others, they have a local standard, reduced requirements for recognition and measurement and disclosures. And the same is more or less in the public sector. We have a common agreement that all have a minimum standard, and only the biggest and powerful economical states decided to use more in Switzerland, and we are following IPSAS. That's more. I also have a personal view that just only reducing disclosure didn't help at all in this project, because reducing disclosures already is covered with the actual standards, because it's a question of materiality. We have discussed it several times, so that didn't help at all. So that leads us, and that's the good thing now, even if I'm the chair of the task force, I have a board which supports us and give us direction and decision. And at least now I want to add on Lynn's point. What it's quite critical is that we know what is the objective of this project. We shouldn't overstate us or think we can solve everything. Maybe we can solve something. And I like the idea that each jurisdiction can decide how they split their companies in small companies or risky companies and which standards they have to follow. I think they have done this in the private sector as well. So I think it's a quite good starting point. And then Odin, thank you for your remembering that we have a conceptual framework, and doesn't matter what we want to go, at least we have a help, this conceptual framework, and that it might be the starting point. And I'm not sure if really the consolidation topic is really an issue, because sometimes it's just simplifying. And because this is a small entity and the result is not different, what we have already also in a Q&A, I think, stated for, I think, financial instruments on using discounted cash flows or something in this area. So, yeah, so I'm also interested in to know what we want to do. So we will see then next year on what is the way. It will challenge us all, because nobody knows so far what is really we can solve, or what we want to present our stakeholders, what we try to achieve with this project. So yeah, thank you very much for the trust in me, even that I can help or lead the task force. And thank you all. Even the staff is required to help us to find the right way.
No, thank you very much, Claudia, and for agreeing to take it on. And thank you very much, I think, to all the board members. I think that's actually been a very, very rich discussion, and I think it really shows we've got a lot of experience that we can draw on. I think it also underlined the challenges that we as a board will face in terms of how we move this forward. I think I'd like to thank Joe for actually having teed up a very good discussion, a very rich discussion through the initial research. And obviously, we've got a number of inputs to the scoping of this study, and one of them Purdy has already alluded to, which is that this is one of the main topics for discussion in the Public Sector Standards Setters Forum. So I think all of this shows we should have a lot of very, very good experience to draw on before we even work out what the project brief is, let alone moving on to a consultation paper. So I'm mindful now that we are at 3 o'clock. So I think at that point, Joe, any final comments you want to make? You've heard a lot. I think you've teed up a very good discussion, but any final words from you?
No, there was a second slide on how to apply the tiers, but I think we've actually got into that anyway. I think that's actually going to be the really, really difficult part about, you know, which entities apply it. And I wish Claudia good luck with it.
Okay, thanks, Joe. So Ross, to you.
Yeah, thanks. I'm just gonna ask that Leah closes the YouTube stream, and I've got a few announcements for people on Zoom and those in the room today, logistically, but the